Way that we've ended up in the last couple of, I want to say, weeks and arguably months, where on Monday you have all this Fed speak, all these things to anticipate, and on Friday you say, well, net, we're right back to where we started. At least that's the bond market story. The equity market story will be fairly interesting as well.
So the Stock 600 finished last week at 522.94. A little bit of a fade, as we say. Friday was the story for equities, but it was a really solid week in terms of the overall performance. So we start this Monday with a few absentees, but nevertheless, let's see how we get going this at the start of this week. There are a few earnings that are going to continue to creep through, and we're going to continue to watch what happens there. I'm intrigued to see how the market takes Ryanair today. I think there's a macro read, not only off Nvidia, but also off Ryanair. So we'll see how that trades. In terms of the early action on the upside, some of the miners look like they're front and center. Unsurprising, given what we're seeing in terms of the metals trade that we're watching. Copper through 11,000, gold on something of a tear as well.
Yeah, so you got your Shells, your Rios, your Anglo-American as well. Glencore, I think, pretty heavy volume as well. I'll also highlight that you're seeing some of the banks higher as well. Lloyd's, for example, is up. You see Barclays is one of your biggest upside movers. To the downside, though, HSBC is going to be one of your biggest weights, at least on the FTSE. AstraZeneca as well, seeing a lot of pain. You can't necessarily compare that to what the sector is doing, simply because those closed markets in Denmark and in Switzerland as well. So keep an eye on kind of volume when it comes to the healthcare sector there. But Standard Chartered as well, there's an interesting banking story, some divergences here between some of those companies.
AstraZeneca out with some news a little bit earlier on, talking about building a £1.5 billion plant in Singapore.
Well, that'll do it.
Which could be a factor behind all of this. But I think it's interesting that what you are also seeing with Astra is kind of where they're positioning themselves in terms of where that manufacturer is going. The UK is making a really big push at the moment to attract more of it. Interesting to see that it's going to Singapore. I think we've got a capital markets day coming up over the next few days. In fact, I think it might be this week. In fact, I think we're going to be joined by Pascal Soriot this week to talk about what is happening with the business. So that's a story that we want to watch out for as well. It does look as if some of the banks are a little light around Europe this morning. So Intesa Sanpaolo is soft, as you say, Chrissy.
I'll also add that ASML is one of your biggest weights on the Stock 600 as well. So perhaps that early tech trade showing up as well. But as we hit it, some of the kind of main mining stocks, Rio Tinto, Glencore, are your biggest ones. It looks like we're still waiting for some of the data to perhaps kind of seep in through. Again, ASML is the one that I have my eye on here. Is that just simply a sell tech ahead of NVIDIA story? They're two completely different companies, do two completely different things. But as kind of the heavyweight du jour, is there a trade there?
But they're part of the same ecosystem. You think about the three stocks that dominates that kind of AI trade. ASML is definitely one of them. NVIDIA's kind of one of the other ones. And then TSMC, which kind of does all the manufacturing, is the third one. And it's increasingly they're seen as being this kind of group that travels on their own.
Yeah, and you already had those TSMC sales 60% boost in April, so that gives you the positive headwinds going into the NVIDIA earnings.
Well, I think one of the issues as well with the chip sector is you don't actually know what is the leading indicator, because remember when ASML came out with those really poor earnings, for lack of a better term, and then you had TSMC coming out with this massive profit growth as well. What is kind of is it the dog wagging its tail versus the tail wagging its
the dog?
Something with a puppy is happening in the chip sector. It's important, though, to talk about kind of what is actually moving the market and what that actually says about risk sentiment. Isn't that the big conversation we've had? How much of NVIDIA is, at the end of the day, a macro story, is a euphoria story?
It's been such an interesting combination of kind of how the macro has interacted with the micro, and NVIDIA kind of falls between those two stools, I think, in terms of the impact that it has. But the macro signals certainly have been quite positive. The earnings story has been reasonably positive as well. There are a couple of things I would flag out of that. Last week, I thought Deere was really interesting in terms of what it told us about what's happening in the manufacturing space. Started to see maybe some weakness creeping in there. We kind of talked a lot about this on Friday to get us kind of sense of what was going on. And in terms of the guests we spoke to, Nancy Curtin had this to say about how she sees this market set up.
It's been our view that the Fed could remain cautious here, may not cut rates at all this year. But so far, economic growth and earnings growth, we think, will trump what's going on in terms of the Fed policy. Remember, liquidity is pretty generous. Look at corporate issuance. Look at corporate spreads. We've reduced QT. We've got bond yields coming down. These are all kind of positive signals.
All right, Alti International Operations CIO, Nancy Curtin. It's fine, I'll tag, all good. I think what's important to hear about this is kind of this idea that she's talking about these positive signals, something that Guy highlighted at the top of the show when it comes to the likes of Mike Wilson, for example, is Uber Bear also saying it's perhaps a sunny macroeconomic environment. Let's bring in one more voice in that conversation. Ian Cunningham, head of multi-asset growth at 91 UK, joins us right here on set. Good morning.
Morning.
Are you as positive as everyone else seems to be?
I mean, on a broad basis, there's a lot of different things going on. I mean, there's a lot of there's elements of increasing stimulus coming out of Asia, so they're trying to clear prices of property. I think across Europe, we are seeing some dynamics in Europe where things are picking up a little bit in the short term, and then within the US, the economy remains pretty solid and robust for the time being.
So it sounds like you are quite positive then. Is this simply positivity? Is this optimism, or is this euphoria? How are you thinking about it?
So I guess when we look at market dynamics, there's a couple of signs within markets that there might be a bit of excess liquidity and some
like
euphoric action taking place. And obviously we've seen some of the meme stocks starting to come back. We've seen some pretty impressive price action in some of the tech space. But on a broad basis, I think we're sort of nowhere in the realms of where we were in 2021 when there was obviously huge excess liquidity and lots of speculation taking place across all sorts of different markets.
And Ian, last I checked, you'd raised your net long US dollar position quite significantly, and then the dollar headed for its first monthly decline this year. So I wonder what your thinking was behind that, and whether you're not convinced that the Fed's actually going to cut rates at all this year.
Sure. So I think earlier on this year, we were starting to rebuild those dollar longs on the basis that we were seeing increasing prospects of divergence. So for us, I guess the probability of the US actually holding up better here has increased. And ultimately, we've expected policy to continue to feed through in Europe, i.e. sort of leading to a continued soft outcome. We expect more disinflationary pressures coming through in Europe and the UK in particular, given that a lot of the prior excess inflation was driven by energy shocks. So it was sort of cost push inflation, whereas in the US it was more sort of excess stimulus and significant amounts of liquidity that was driving those inflationary dynamics.
So you might have divergence between the Fed and European central banks, but what about within the European central banks, between the Bank of England and the ECB? Maybe not just at the start, but how much divergence do you see throughout the easing cycle?
So we would say, I think when we look at both the ECB and the Bank of England, there's a pretty good chance they're going to go in June and then continue to ease, and we'd expect more pronounced easing cycles in Europe than we would in the US.
What's your level of conviction at the moment? How certain are you of outcomes? Because it strikes me that protection is really cheap. VIX is below 12. You can go out and you can buy upside, downside protection, certainly on the downside, very cheaply right now. Why is nobody buying it?
So, on your point of conviction, I think we'd openly admit that the spectrum of potential outcomes feels wide at the moment. Yep. And I say that because we still exited out of this era of exceptionally easy monetary policy, and there are risks associated with that as we continue to trundle forward, and that policy feeds through particularly into corporations and into household refinancing, relevant in Europe. But then when we look at the other side of the spectrum, we've got a world-changing technology that's with us, and we've got central banks who want to ease, and that the Fed seem to be setting a relatively high bar not to ease later on this year. So you've got potentially increasing liquidity conditions.
And the latter just kind of dominates the former. There are risks, we don't know about them, but if you've got those two trends in place, don't worry about that. Just keep going.
So there's those trends, and then some other really big key trends are everything relating to everything that feeds through into decarbonisation spend, defence spending, and the broader infrastructure programs that particularly sit within the US. So there's a CapEx cycle underway under the surface as well.
Ian, is this the calm before the storm? Before everyone starts to price in the election risk, the geopolitical risk? Is this kind of why everyone's maybe coasting, maybe why the VIX is below a 12 right now?
So I think, as you say, there are event risks on the horizon, and as we move into the US election and then some of the policies that may come out of that, there are risks associated with certain parts of the
What's the hedge?
world. So I think ultimately when you look at various different dynamics, credit spreads are exceptionally tight at the moment, so hedges there could be relevant. Obviously, within equity markets, there's potentially hedges as well in terms of just generic options, but obviously markets can be quite dynamic, and we can end up with our puts pretty far out the money pretty quickly. And then within currencies, there's some interesting dynamics. Obviously, volatility in currencies is exceptionally low as well, particularly in some of the Asian crosses. And if we start to see increased protectionism and the like, tariffs, then there's some interesting things to play there.
Just on that geopolitical news, of course, we have had various developments today from Iran, Saudi Arabia, Israel as well. I wonder if you share some analyst scepticism about government rhetoric on defence spending actually translating into benefits for defence equity stocks.
Yeah, so I think for us, I mean, the key, I guess, when we're looking for positions, we're ultimately looking for positions that can benefit from a broad spread of different dynamics. So we would say the materials space has pretty strong underpinnings from multiple different angles. So it's more those areas that would be keen to get involved in.
What are investors' objectives at this point? When you talk to investors, when you think about kind of what they want to see, what are they telling you about how they see their story developing over the next sort of 6 to 12 months? I'm not talking about sort of years out, but if you think about kind of what investors are doing right now, are they in capital preservation mode? Are they in capital allocation mode? They want to make sure that they're part of this rally. What are their biggest fears right now? Is it missing out? Is FOMO still part of the narrative? Is capital reservation after a decent run part of the narrative? And how are those two kind of shifting right now?
I think you'd probably say 2021 there was a lot of FOMO.
Yep.
2022 there was a lot of capital preservation going on, and we're probably somewhere halfway in between now.
So FOMO is still part of the narrative.
So we would say ultimately there's people clients want to participate in these moves in markets.
Are you worried a lot about a short squeeze? I mean, if you have this much momentum here, are you speaking to clients and saying, why aren't we more invested, for example? Why aren't you even more bullish on this?
And I think it's different across different parts of the world. So I mean, you could say this is going on in China and Hong Kong now. Yeah, there's a lot of people very underweight that market, and there are policies coming through that are not yet game changing, but there's policies there that are trying to put a floor under things.
Just in two. Credit wants to talk about dividends and buybacks, I'm sure, at some points during this show. How much of that is a relevant part of the conversation right now, that they believe that actually the dividend and buyback story is just so strong that it wants to keep you invested because you're just taking out stock at such a rate?
Is this in China specifically?
No, here in the UK, elsewhere? Here in Europe and broadly in the States too. Yeah.
I mean, ultimately, I think there's parts of the world where you've seen quite a lot of capital market reform. So parts of Asia in particular, there's been efforts of authorities to force buybacks and force dividends. And then I think more broadly across the world, those dynamics remain ongoing from this cycle or the past 10 years where you are seeing a lot of money chewing up those shares.
But is that just a function of excess profits circa 2020, this kind of massive capital issuance, for example, that a lot of these companies had on both sides of the Atlantic, these record numbers in the bond market? Is this just a carry through from 3 years ago?
Well, I think if you look at various corporations, obviously the smaller cap end of the spectrum is struggling to some degree because there's quite a lot of leverage in there, and it's sort of a bit too speed. And then on the other side of the spectrum, you've got a lot of companies sat on a lot of cash who are going to be progressively returning that to shareholders.
Okay. Ian, great stuff. Thank you very much indeed. Ian Cunningham, Head of Multi-Asset Growth at 91. Right, Joe, what's happening with the stocks? Walk us through some of the single names.
One place to start, and that is in video games, because we are seeing a 63% gain in Keywords Studios here in London. Surprise, surprise, that is a record gain for that stock. And we're also seeing a bit of a feed through into some peers like Frontier Developments, up 7%. Clearly a bit of a read through in that one at the moment. Keywords is a designer of games, as we said in Stocks Watch. It's actually based out in Dublin, but it is listed here in the UK. We're keeping an eye on Embracer and also Ubisoft as well. Keywords actually a client of Ubisoft. Ubisoft had its own broker move today, but that is the clear movement. We've got another UK takeover by a foreign entity as EQT comes in, seeing some cheap valuations in the UK. Then speaking of UK, we'll look at a couple of mining stocks. We did have that gain in copper. Copper was up 2.7% early in the UK today, and also the gold price is the one standing out, up around $25 this morning, and that is boosting a couple of precious metals miners miners today. Hochschild and Fresnillo, both of them gaining more than 3% this morning. Glencore and Anglo obviously more focused on the copper, iron ore, those kind of base metals, getting a boost as well. So all of them moving higher today. We'll have a look at Ryanair. There wasn't too much movement on that one. They have warned of a slowdown in some pricing as they discount heading into the summer, but coming down 0.7% at the moment. That was kind of priced in, given Michael O'Leary, given those shock comments a couple of weeks ago that moved the whole sector. But Ryanair slipping a bit now, down 0.7% on the Dublin Exchange. Then we'll look at some real estate stocks. Couple of things to bring you today. UK house prices at record highs. That's not what we want to hear if you're in the market to buy, but we are seeing a bit of a boost in Persimmon, Taylor Wimpey, Berkeley, the home builders. It was actually up less than expected by economists, but nonetheless, the house price is rising according to Rightmove. And then over in Sweden, obviously, I'm never going to try and pronounce that, but that is SBB, and it's down 6%. They have got a bit of a warning out from Fitch on their debt over the weekend, and that is getting hit a little bit on the market over in Stockholm today, down 6% on that one. I'm sure some people will be able to pronounce that, but I won't. Now, in terms of German autos, we did mention that in the Morgan Stanley note, and both of those ones that are downgraded to underweight are declining. That's Porsche and Volkswagen. MS recommends selling them. They do keep an eye on Mercedes. A lot of this is due to prices coming down. Then Mercedes has a decent buyback, so they kind of like that one. But those stocks are underperforming. That Morgan Stanley recommends selling over in Germany. Finally, from Beamers to Aston Martins. This one more positive. HSBC, for the first time ever, recommends buying Aston Martin. They had yet more weak results a few weeks ago. The stock fell. HSBC sees an opportunity to buy. We're getting a big move on that one, up 3%, 180 price target, trades at 145, plenty of upside. That one's moving in London today.
All right, Joe Easton from our equities team, we thank you for the update on the stocks on the move. 15 minutes into the open. And Critty, you've been telling me you want to talk about video games. I did not have you down as a gamer.
I know, I'm not at all, but I think for our global audience, you should know that when I first started out at Bloomberg as a wee intern back in the glory days, my two stock beats were video games and marijuana stocks, and this was October 2018. There's a
reason for that combination?
I think it was just at that point, it wasn't this kind of booming industry that it is now, and they gave it to the intern because they wanted, me out of their hair, and it ended up being the best learning experience because guess what happened, 5-6 years later? It's the two industries that have had, I would argue, the most growth right outside of, the tech sector. So
can I just say, weirdly, as an intern here in the UK at Bloomberg, I too had to cover the marijuana industry and brought a T-shirt back for my husband where he wears it in the airport. People look at him really weirdly.
I'm sure. The takeaway from my mind, though, this morning on both of these trades, apart from the fact that I think these days are the Critty's glory days, but we'll kind of park that one for the moment, is the level of takeovers in the UK. You could go back to the BHP story and the Anglo story. That obviously is at the other end in terms of the cap scale. But there are, every day it seems at the moment, we are talking about deal flow out of the UK. People recognising maybe just how cheap the UK has become. In some ways it still looks cheap. So does this momentum continue? I was told months ago that there were loads of deals in the pipeline. We're now starting to see that evidence.
Yeah, and we're going to get into this later on, but just on the BHP Anglo point, it really ties back into the copper story, because that's surely a huge reason why BHP wants Anglo American to be the biggest copper operator in the world.
Are we going to be happy in the UK, though, potentially to lose that stock out of the FTSE 100? I think there may be a lot of annoyance. We'll find out on Wednesday, because that's the put up and shut up moment. When we get to that, what is BHP ultimately going to do? And as owners of Anglo, it looks like Anglo is going to do all the hard work. And if BHP wants to come back in 6 months' time, would it be a much higher valued company? We'll continue the conversation around UK stocks and what's happening globally. Stocks are going to be affected by the next story that we're going to be covering. Wall Street bracing for T+1. We're going to explain what T+1 means. It's basically about how stocks are settled and how quickly that happens. It's going to happen within a one-day period, down from 2. What impact, what ramifications will that mean for global stocks? Also for global FX as well. That's a big part of this story. We'll talk about it next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is Markets Today. We're 21 minutes into the European trading day. Flat to the upside on the stock 600. Energy and basic resources leading the gains this morning, as you might expect, given the moves on gold and copper. But we're going to talk about the plumbing now. Wall Street gearing up for a major shift to faster US stock settlement. When markets open next Tuesday, the time allowed to complete every transaction is going to have to be halved to a single day. Analysts fear the change may bring a spike in the number of failed trades, operational glitches, and additional costs. So let's get more on all of this with Bloomberg's Greg Ritchie. Greg, you've written a great piece about this. I wonder what it actually involves to change this behind the scenes. Where are the pressure points?
Thank you. I mean, basically lots of processes which currently there's plenty of time to do have to be done in a matter of hours. And it's a bit of a misnomer. We're saying it's a one-day settlement cycle. In reality, a lot of these processes, the time to actually conduct them is much shorter. So let's say you complete a US equity transaction at 4 p.m. New York. You've only got 5 hours to affirm that trade with your broker-dealer in the DTCC at 10 p.m. So it's all these sorts of things when you consider how much volume is going through US securities markets. That's where people are concerned. And people have made preparations, but ultimately, even if you as an institution are very well prepared, is your counterparty prepared? Are all your intermediaries prepared? You can never be entirely sure, and that's why there is anxiety.
That's the stock story. Then there's the FX story as well. It requires an extra kind of component of funding as well. Where does this go wrong? Where's the biggest kind of challenge here?
You're exactly right to highlight that. I think it's quite ironic that this is the US regulation, but it's going to be Asia-based institutions, Europe-based institutions, because they have to buy the dollars before they buy their US stocks, their US securities. Now, the time to do that is going to be massively compressed, and they're going to have to conduct a lot of FX volumes at the end of the New York session. Right now, if you're a currency trader, you'd far rather be transacting when London is online, because that's where a lot of the liquidity is. Doing it at 4 to 5 p.m. New York, we're not used to volumes at that time of the day. We don't know what's going to happen to bid-offer spreads. We don't know how much new volume is going to shift there. That's the uncertainty, and it's a cost that's going to have to be carried by Europe and Asia-based institutions.
I think a lot more people are going to be working on Friday evenings than were working previously on Friday evenings. It's not great. I'd say Friday evenings Very pleasant. Anyway, Greg, thank you very much indeed. Really nicely written piece. Really enjoyable to read this morning. Greg Ritchie on our Big Take today. Another factor we've been watching very carefully with the way that markets are working has been this huge pickup that we've been seeing. We referenced this earlier on in the programme in terms of buybacks here in Europe. Now, Europe has traditionally been driven by dividends if we're talking about how companies think about ways of returning money to shareholders or at least boosting their asset base. In the States, buybacks have been a much bigger feature of the landscape, but that has changed. It somehow coincided with Chrissy's arrival here in Europe, or certainly our recognition maybe of it. We were talking about this Friday. Chrissy wasn't here, so we wanted to come back to the subject. Cole Smead, the CEO of Smead Capital Management, joined us around the studio on Friday to discuss this. This is what he had to say about the European approach.
There's a myth out there that there's this American style of capitalism that only Americans can do. It's crazy when I hear that. It's like, oh, yeah, buybacks were created for Americans by God? No. This is capitalism. It's just that the Americans have been a lot more aggressive in that style of capitalism. But again, using Orchell as an example, he's been doing those same things. Did the Americans say, oh, this person over here is doing it, I should go own that and make a lot of money? No, they were losing money in banks that disappeared a year ago. What I like here is optimism's low, okay? What I don't like here is there's a historical stigma around buybacks. I don't get it. It's like they treat it like the gnomes of Zurich. If they raise their dividend, the gnomes of Zurich are going to come out of their woodwork and they're going to pour money to their hedge funds and buy the extra income that these stocks provide.
Thoughts?
He doesn't get it. He doesn't get it, Guy. I think it's as simple as that. There's a regulatory scrutiny around this as well, right? Yes, there's a historic stigma, 100%.
Yeah.
But the reason that buybacks dividends happen so much in the United States, it's not just a capitalism kind of American story. It's because there's an incentive to do it. You're doing it through pension holders, through massive endowments, college institutions, for example. That kind of passive investment does not exist in Europe. It doesn't exist in the FTSE. It doesn't exist in the same way it does in the U.S. So I think the incentive, one, is diminished, and two, there's also a regulatory
Well, there was always this view that buybacks were open to manipulation. I've never really understood the difference between that and a dividend story, but there's always been this kind of idea that you were incentivized as a CEO to do that, and the incentive was different when it came to dividends. But it does seem to be taking off now here in the UK, and certainly seems to be taking off more broadly across Europe. So it's going to be interesting to see whether this is a trend that continues. It does, to a European operator, feel like an American trend.
Yeah, but this is also a question of excess profits, right? So we're in an arena where this kind of consumer resilience out of the States has really been eye-watering and unexpected, and therefore cue the buybacks.
But that's precisely why it's the oil giants and the banks who are giving those buybacks here in the UK, giving the FTSE some hope moving forward. Coming up, as the Iranian news agencies confirm the deaths of both the country's president and the foreign minister, we'll bring you the details and discuss the implications for the wider region. That's coming up next. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching the China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
This is Markets Today. We're about 30 minutes into the European trading day. We're seeing some marginal gains here on the Stock 600 and the FTSE 100. It looks like the party continues when it comes to the global equity market, but a lot of this is led by two sectors in particular. We're looking at a commodity-driven story. A lot of that's following the kind of gains you're seeing in the copper as well, this euphoric tilt that you may be seeing in the macroeconomic space. Banks are kind of split here, though. You are seeing a little bit of outperformance there as well. It's a really interesting market dynamic that we're seeing, but how much of this is a wait-and-see mode for perhaps the rest of the week, Guy?
Absolutely. We're building up to NVIDIA. Those are the key numbers that we're going to be watching out for. But there's some key, the M&A story is going to be there as well. Yeah. We'll talk more about this in a little while. But BHP, big deadline coming up on Wednesday. So we're going to watch very carefully to see exactly how we build up into that.
Yeah.
And to what extent is what we're seeing with the basic resources trade this morning kind of the M&A story? I think probably less so and more about what is happening with that big move that we've seen in copper.
Yeah, I'm not saying that the M&A story is what's fueling the copper rally, but the reason that BHP wants Anglo-American is partly because of the reasons that are fueling copper, because of the supply problems, right?
We'll come back to that a little bit later on. We probably should turn our attention now to what is happening in Iran. Iranian news agencies have confirmed the country's president, Raisi, and the foreign minister have both died in a helicopter crash. That happened Sunday. Search teams have now located the wreckage. This is in Iran's mountainous sort of northwest region where they had been visiting. Apparently the weather was extremely bad and there were significant amounts of fog. Jane Kinnemont, who is Policy and Impact Director of the European Leadership Network, ELN, a pan-European think tank focusing on European foreign defence and security issues. Jane, what do you think the implications of this are going to be for Iran and the wider region?
Well, it's a shock event in one of the most important countries in the region, but the immediate geopolitical implications may be quite limited, assuming that Iran does not blame outside countries or forces for this death. The Iranian system has got a lot of its own problems and insecurities. It's already dealing with a slow-motion succession crisis over who becomes the successor to the country's top cleric, who's in his mid-80s and said to be not very well. But when it comes to replacing the president, there are enough other forces and people in the regime who are likely to be able to close ranks. They're unlikely to significantly change Iran's foreign policy orientation. But it is still early days, and we don't know what is going to happen in terms of the blame game, whether the government will say this is a tragic accident or whether they will try to cast blame on others.
What would you expect in terms of the political narrative at the moment? Is this something, given what's happening with Israel, given what is happening in the wider region, would there be an advantage in blaming others? I guess is the question that I'm going to ask when it comes to this accident.
I think it's most likely that this has been an accident caused by very bad weather, and Iran has a really poor record in aviation safety. Some of that is partly because it is under sanctions and it finds it very difficult to keep upgrading and modernising its helicopters and its planes. So certainly I think you'll see some emphasis on that from the Iranian government to say sanctions really are deadly. But at the same time, this is a country where they have had senior officials assassinated both by America in the case of Qasem Soleimani back in 2020 and by Israel, including just a few weeks ago, some senior commanders who were in Damascus at the time. However, it would be completely unprecedented to have interference at this level of politics. and with people who are sort of in the government rather than involved in Iran's paramilitary operations overseas. I think Iran probably also won't want to look weak. So I don't think there will be that official blaming, but there will be a lot of conspiracy theories. And of course, there'll be a lot of internal conspiracy theories as well. Some thought that Raisi might be a candidate to become the supreme leader in the future. There is a big internal tussle over that position, which ultimately is more important than the president. So Raisi had a lot of enemies, and there will be a lot of speculation and theories, especially in a country where, for understandable reasons, people don't much trust the official news sources.
Jane, so that is the Iranian story, and of course, just one part of the story coming out of the Middle East over the weekend. I want to switch over to Israel as well, because we've got plenty of headlines coming out of there as well. Internal turmoil, you say, in Iran, but perhaps internal turmoil in Israel as well, where Benny Gantz, for example, has threatened that unless there's a new war plan actually presented, he could quit the government altogether. Can you walk us through the dynamics there? What do we need to pay attention to?
So there really is a question about how long Netanyahu can hold on for. We know that if there were fresh elections, he would be thrown out. But one of the factors that has really been complicating the efforts to reach a ceasefire in Gaza is that Netanyahu has to think, of course, about the country's security, but he is also thinking about his own political survival. And indeed, if he leaves office, he will also be vulnerable to various corruption charges. So it's very, very high stakes for him. And essentially, he will need to make a choice. Does he placate the hard right parts of his governing coalition who want to see an offensive in Rafah? Or does he stick with people like Gantz in the war cabinet, who he doesn't personally like? They're old rivals, but they are more experienced, more professional, and have more international trust. Gantz is probably calculating that if he leaves the government, it could trigger elections. And opinion polls in Israel suggest that most Israelis would rather have somebody else at the helm at this time of profound crisis.
So, Jane, what are we waiting for here? Is it the June 8th deadline that Benny Gantz has presented? Are we waiting for more updates on weapon shipments coming out of the states, Biden policy? What is the kind of game changer, perhaps?
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
That you could get someone succeeds him that takes a different view. You could get someone who succeeds him. You could get a new foreign minister who are more au fait with the West and better able to work out how they might get to some mutually advantageous understanding. The problem is that since the JCPOA was so badly damaged back in 2018 by Trump leaving, Iran has gradually just built up more and more nuclear capabilities. And it's probably impossible now to get back to where we were with the JCPOA because, it's gained so much technical know-how. The inspectors have lost so much information that, Iran is really the country that has gained in a lot of ways from the nuclear deal not being enforced. So probably the international priority now is to make sure it doesn't convert the knowledge and technology it does have into a weapons program. That's a much lower ambition than there used to be, but it remains something really urgent, as we do know that Saudi Arabia, UAE, Turkey, and others are talking about how they will look at their own options for nuclear weapons if Iran did come to get one.
Okay, Jane Kinnenmont, Policy and Impact Director at the European Leadership Network. Lovely to see you, despite the circumstances. We'll get back to the markets next. This is Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
we're guiding fares in the peak summer months flat to modestly up, and that's on top of a 21% fare increase. We would hope to have 158, maybe if we're lucky, 160, 161 game changers in the fleet by the end of July. That's roughly 20, 23 aircraft shy of where we had hoped.
Neil Soran, the CFO over at Ryanair, talking to Tom a little bit earlier on this morning. Let's talk more about what Ryanair had to say for itself. It's a little lower this morning, the stock. It met estimates, but it's the outlook that really is where I think the interest lies this morning. Joining us now to discuss, Siddharth Phillip from our aviation team. Sid, look, the expectation coming into the summer was that we were going to see strong demand that was going to drive prices. Ryanair is a master of dynamic pricing. We're not seeing that. Why?
So at the moment, I think there's a lot of, airlines expected fares to continue growing this summer, and that really hasn't kept up. So I think people are getting a little more circumspect about spending, especially on holidays. And while demand is strong, while airlines have said demand is strong, that sort of rush where people are willing to pay as much as they can to go on holiday, I think that's sort of fading away a little bit.
So is this a Ryanair story or is this a broader sector story?
I think Ryanair is a leading indicator for the broader sector, and I think that's what investors will be looking at in terms of how demand pans out going into the summer, because especially with Ryanair, it is one of the biggest low-cost carriers in Europe, and that is where sort of the bulk of the market travels, and that's really an indicator of where demand can go from here.
And how much of a boost did Ryanair get from the Wizz Air grounding, and then how much of a hit can we expect when we get Wizz Air's results later in the week?
So Ryanair was hoping for a massive boost from Wizz Air's grounding, especially because so many aircraft of their A321s are grounded because of the engine issues, and that's what they were sort of banking on, the fact that low capacity this summer would mean prices go much higher. And I think they sort of tempered those expectations now, saying that the prices will be flat to a modest growth. And I think that's sort of indicative of demand out there in the market.
So this is confirmation that the revenge travel story is over. But the expectation was that, we would see that fading anyway, but the capacity issue would keep prices high. Ryanair's dealing with its own capacity issues, obviously around deliveries of the MAX and the 737. There was an inkling today maybe they're not going to get even as many aircraft as they had anticipated. Now, they've got kind words to say for Stephanie Pope and what she's doing at Boeing in Seattle. But nevertheless, is there a sense that actually the initial numbers may not even be matched?
So Ryanair said they're about 20 to 23 aircraft short this summer from what they wanted to be. And I think they are sort of struggling to get capacity. They were hoping to get as many MAXs out as possible because they have more seats on them versus their older NGs. And it gets them sort of way more sort of capacity and allows them to offer more services and more capacity. Their entire strategy is sort of offering routes and then filling them up with low fares.
Sid, we have to get to my favorite topic, which is buybacks and dividends. Ryanair's new to that game, relatively speaking. How long does it continue if we're already talking about these flat fares?
That's a really good question. I think that's what everyone's hoping to see, because 700 million was the buyback they announced today. They've also announced a dividend earlier. And so essentially investors are looking to see what sort of shareholder returns are going to come as they go along. And I think the company still said it's too early for an outlook. But I think that's what everyone's really hoping to see, what sort of investor returns come back.
All right, Bloomberg's Sid Phillip, thank you for that. The latest on the Ryanair earnings. And don't miss our interview with Michael O'Leary, the CEO of Ryanair, of course, on those earnings. That's at 1:15 p.m. UK time. Now, we have been talking about what a busy week it's shaping up to be for M&A, a dramatic week. Time running out for BHP to make an improved offer to acquire rival Anglo after 2 bids rejected already. BHP is, of course, particularly interested in Anglo's copper mines, the metal surging to its highest ever level earlier, extending a months-long rally. Bloomberg's Martin Ritchie joins us now for more. Martin, does the fact that Anglo's restructuring plan looks so similar to BHP's bode well for BHP?
It's a good question. As you said, BHP has until 5 p.m. London time this Wednesday to decide whether it's going to go for that full takeover of Anglo-American, chiefly targeting the copper assets. As you said, Anglo has already put out its rival proposal, saying it will break up the company, creating something that looks roughly like what BHP had proposed anyway. There's kind of two ways of looking at that. On the one hand, BHP might want to get this done as quickly as possible before Anglo has a chance to put through its own restructuring and perhaps get a better valuation. This might be the only chance for BHP. On the other hand, I think it might make Anglo shareholders perhaps a little bit more cautious about the bid. Look, they might say, look, we can get something similar from what Anglo management's proposing. Let's just wait and see how that pans out. BHP, we understand, would prefer to have engagement with the Anglo board. Perhaps they will table a higher bid just to try and get the shareholders to pressure management to start talks. But as yet, we haven't heard anything. Waiting for some news from BHP any time over the next 2 days.
It does kind of feel as if BHP's bidding against itself at the moment, which is an interesting place to be, and maybe its shareholders may feel something about that. Martin, let's just talk a little bit about the copper price. It feels like we've got two markets right now. You've got the speculative market, which is driving the price higher, but you've got the real market, which is feeling like it's maybe a little oversupplied at the moment. Why are we getting this divergence between those two markets?
Yeah, it's a very good question, and it really is quite striking, especially speaking here from China, where I think if you speak to people in the copper market here in China, the biggest market in the world, people are not particularly optimistic, not particularly bullish about demand this year. But at the same time, you've got the copper prices going gangbusters in the rest of the world. Copper futures or metals futures are sort of forward-looking assets. So people are really anticipating supply shortages starting to get more serious over the next 12 months or so. We've seen a lot of very bullish, optimistic forecasts of that happening. And that's really what's attracted a lot of speculative money into copper, into the London Metal Exchange in recent months. The idea that this is starting to happen, these shortfalls are starting to appear. But that's causing this dislocation, which you've pointed out, between the price in London and what people might be seeing in the physical markets.
Well, Martin, the kind of euphoria that you're seeing in copper, the speculative pricing, as you put it, it breeds questions of when that kind of market action is going to snap. I'm curious, connect the two for us. Could it snap in time to affect the premium on the Anglo deal? Is there a connection to be made there?
Look, I think it's partly sort of just coincidental timing. I think that BHP has launched this bid, which is very much driven by hopes for copper prices and demand. It's sort of coincidental that it just happens to be happening at the same time as we've got copper prices going to $11,000. I don't think BHP is going to make a decision on whether to go ahead just based on what the copper price is today. I think BHP has made very clear over the past 2 or 3 years that it wants copper assets very much for the long term, for the next 2-3 decades. So obviously it makes colourful backdrop for the bid, but I don't think that's what's at the core of motivating BHP.
All right, we'll have to see how high these prices actually rise. Bloomberg's Martin Ritchie, we thank you so much for that context on the copper market and, of course, the deal flow that we are seeing around BHP and Anglo American. Now, speaking of deal flow, this is, I think, where I can put my Spanish correspondent hat on properly.
You could probably buy one of those as well.
A badge of honor, I think. A sweatshirt, all the paraphernalia. Let's talk a little bit about this BBVA Sabadell deal.
Yeah.
You now have Mexican billionaire Daniel Martinez backing it. You have the ECB saying, we're a fan. What could possibly go wrong?
Spanish politics, shareholders, unions, staff. There are many issues that stand in the way of this deal. I still think this deal is emblematic of a problem that Europe faces, which is you can do deals within a country, and even then that appears to be quite hard. Doing deals outside of and cross-border deals, incredibly difficult.
Isn't this exactly what Emmanuel Macron spoke to John Micklethwaite about?
Exactly.
Idea that he's actually ramping them up. I'll also add the other piece of the equation, sorry to interrupt you, was the idea that the Bank of Spain is actually at the same time increasing their standards around lending at the exact same time. They're saying it's not going to happen until October of 2026, but they're saying that reserves that those banks need, that the U.S., by the way, is pulling back on, or potentially reported to be pulling back on, Spain is ramping it up because they're worried about the longevity of those banks.
Well, the point that Emmanuel Macron is making is that you need to have this sort of takeover if you want to compete internationally. So, yeah, it's interesting that you've got the ECB and the second biggest investor supporting it. You talk about the potential blowback later on from shareholders, but this surely shows that the shareholders, some of them at least, do support this deal.
Some of them certainly do, and you can see the attraction of doing such a deal. You need to take out an awful lot, though, in terms of the domestic banking network in order to make this work. There is to make this deal stand up and to really work for shareholders, you have got to take out an enormous amount of costs. And that is going to be something that is politically problematic, and I think that is where the pushback may come. I'm not saying that you can't make the deal work on paper, which you almost certainly can.
Yeah.
It's whether or not you can make it work in the real world and with the politics that go around that.
There's also, I'm curious, I don't think on the record Santander has said anything about this just yet, but Santander is, of course, the largest Spanish bank.
Yep.
They don't only have massive of a presence in Spain and broader Europe, but in Latin America as well. And, that's why
here in the UK and elsewhere.
Right, internationally. But that's why this deal is so interesting, because BBVA in particular is more of an EM kind of exposure, whereas Sabadell has more of that domestic story. Together, they actively compete with Santander. And I'm wondering if there's some sort of behind-the-scenes politics, behind-the-scenes lobby about that competition not being a positive thing, but actually almost cannibalizing some of that growth within Spain.
But it's precisely Sabadell's focus on lending in Spain with the counterweight of BBVA's tilt towards emerging markets that reportedly makes the ECB give this support, despite it being potentially a hostile takeover.
I think the bigger takeaway from all of this, though, is that we are seeing some deal flow.
Yeah.
Things are starting to happen. We've got deal flow certainly happening in the UK. Deal flow has been sort of really absent for quite some time. You're certainly seeing evidence of that continuing to push on. Is that something that keeps equity markets on track as well in terms of the rally that we're seeing? I find it fascinating that this is a day when Mike Wilson, one of the biggest bears out there, has finally capitulated and raised his targets. What is there that is standing in the way of this rally continuing?
Well, is deal flow a sign then of good times ahead? Is it an expansionary story, or is it a consolidation story ahead of poor times ahead? And I've never been able to figure out what it's actually a sign of, because you see it at the best of times and the worst of times, and the fact that we can't tell which we're in is a problem.
And is it better that companies do deals or that they buy back their stock?
Yeah.
And kind of what do shareholders ultimately
Sophie's choice.
These are tricky decisions that have to be made. But Mike Wilson, it looks as if he has finally capitulated. Is that a signal that maybe the market will take on and think about a little bit more? We're going to carry on the conversation. We're done for this morning. The Pulse is up next. Francine Lacqua taking you through the next hour. I hope the rest of Monday is as interesting as the start. We'll continue to see the build-up to the NVIDIA numbers, which come Wednesday. This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? a question or visit SearchGo to find answers now.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rates. World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Iran's president and foreign minister are killed in a helicopter crash in a mountainous part of the country. Their deaths add further uncertainty to a region already in turmoil. Copper surges to another record, gold also hitting new high, while investors bracing for Nvidia's earnings on Wednesday. Plus, Ryanair warns that fares may be flat this summer and that Boeing deliveries of the 737 MAX jets may actually slip further. So first of all, let's take a look at markets. I have to say there's quite a lot going on, especially for a Monday morning. Now, miners are actually keeping Europe's stock benchmark afloat this Monday morning. Prices for copper and gold surging to an all-time high. Oil also held in gains as the market is watching out for any fallout from political ructions in two of the world's major crude producers. We're, of course, thinking of Saudi Arabia and Iran. For the moment, there is a little bit of support overall for these European markets, but of course the timing of the Fed's likely pivot to raise rates or to cut rates has shaped trading across financial markets in recent days. So we also have CPI in the UK a little bit later on, but for the moment you can see S&P futures practically unchanged, gold almost at a record, and copper definitely at a record, over 10,900. If you look at the highest ever for copper, it's extending months rally, of course, driven by investors who've piled into the market in anticipation of deepening supply shortages. But investors really keeping an eye on the Middle East after the Iranian president died in a helicopter crash. So Iranian news agencies have confirmed that the country's president, Ibrahim Raisi, and foreign minister have died in this helicopter crash. Now, search teams located the wreckage in Iran's mountainous northwest region. So for more on this and what this means going forward, let's get straight to Tina Fordham, geopolitical strategist and founder of Fordham Global Foresight. We're also joined by Bloomberg's Middle East and Africa editor, Roz Matheson. So thank you both for joining us. Roz, I mean, this is pretty shocking news. And of course, it's happening in a region which is extremely volatile already. What happens next in Iran?
Well, that's the big question. Obviously, this was a shocking development for Iran, the deaths of the president and the foreign minister in this crash. What we know is that, of course, Raisi's deputy, the first vice president, takes over, at least for now. We'd expect an election to come within about 50 days. That's part of the Iranian constitution. So he's really there just to keep things going until there can be an election. But that's then the real question. Who would be the preferred candidate in that election? It is an election in quote marks, but of course it's also quite a managed process. So who's going to be the anointed person to be the candidate for that? And then beyond that, of course, he was seen as a key successor potentially to the supreme leader, Ayatollah Khamenei. And so with him gone, what does that change that process? Does it mean that Khamenei's son becomes the key person in line to take over eventually at some point? Of course, the supreme leader is in his 80s. So there are longer term questions also about that. But for Iran at the moment, policy-wise, it doesn't probably mean any significant change.
Ross, can you tell us about, I mean, we understand that Russia has also said that they would help with the investigation. We also heard from the U.S. that actually they don't think there was any foul play.
Well, that's right, and Israel has preemptively come out and said it had nothing to do with this. And you can see from the footage yesterday, the weather was appalling. I mean, the fog, now there's snow and mud. I mean, the conditions were terrible that they were flying in. Maybe it raises questions about why would you fly in those conditions. And also there are questions about the maintenance and status of those helicopters. Of course, they were very old, given the US sanctions. Were those helicopters being properly maintained? But at this point, it doesn't seem to be anything other than a terrible accident. And certainly there's no hint from the US or others that they think otherwise.
Tina, as we're saying with Roz, I mean, this is a very complex region. This is a very volatile region with geopolitics. What's the immediate concern that you have with the passing of the president?
Few in Iran will mourn the passing of Ibrahim Raisi, who was known as the butcher of Tehran, and is thought to have presided over the execution of mass execution of political prisoners. So what we're really looking at is an internal power struggle within the leadership of Iran, the supreme leader, Ayatollah Khamenei, and the IRGC, the Revolutionary Guard. There'll be a lot of hope that within the country that there could be some possibility of a moderate taking over the leadership. But as Rosalind has said, the elections will be tightly managed, and the obsession really with Iran's leadership is going to be controlling that succession and not allowing any opening for its domestic rivals to exploit.
Tina, for our experts on the ground, his election in 2021 was largely seen as having been engineered by an unelected upper chambers and also got rid of many candidates that wanted to put themselves forward. Do we have any insight into that kind of history replicating itself now, or what do we know about possible other candidates?
It's going to be a managed transition. I think that they won't want to allow any daylight. Now, there is some hope that given the extremely low turnout in the last couple of elections, I mean, Iran does have elections, although they are tightly controlled and managed, they might be able to boost turnout by allowing some reformists, so-called reformists to run, like Lajani or others, might get more people in the streets. But given the protests of the last couple of years, the woman life freedom protests, and the extreme pressure the regime finds itself under, 50 years after the revolution, with its aging leadership and a very young population, plus the wider turmoil in the Middle East and the recent exchange of ballistic missiles between Israel and Iran, I suspect they're going to have a candidates on the slate who will allow complete consistency, and that goes for domestic and foreign policy.
Roz, I guess, with my understanding is Raisi did not have the kind of political clout that some of the previous presidents enjoyed. Mohammed Ahmadinejad was extremely liked and had a big grassroots movement, and he was a hardliner. Again, who can emerge actually in this battle now?
Well, that is the key question. I mean, as Tina was saying, he wasn't as popular. The turnout was very low in 2021, but he was obviously endorsed by, the top leadership and in alignment with them, particularly, again, much more hawkish when it came to things like the nuclear deal with the US. And recently, of course, Iran's been embroiled through the back door and more directly in the last month when it comes to Israel. But there's also been the relationship between Iran and Saudi and that effort to try and normalize ties there. So it's going to be a question of consistency, whoever it is. There isn't really room at the moment for any kind of reformist to be more than a token candidate in the election. So what we're looking at is the current first vice president, is he the person who would be seen to be getting the nod in the election to continue? Because, again, he was handpicked by Raisi in 2021.
And would Russia actually try and give as much support as they can to Iran right now?
Well, clearly they've been working very closely together in a bunch of ways. I mean, Iran's been sending drones to Russia to use in the war against Ukraine. Russia's been a strong supporter of Iran against the West. So there's a mutual relationship there that's going on. And certainly we've seen Russia come out very quickly today to express condolences, and they were very quick yesterday to express their concern about this. So they've got a vested interest in the status quo in Iran, and in obviously having a similar kind of leadership after the election. So for Russia, it'll just be simply about ensuring that whoever's in power remains a hardliner.
And Tina, what does this mean for oil and oil markets?
I don't expect oil markets to move much on this news. I mean, after all, oil markets didn't move much after this unprecedented exchange of ballistic missile fire a few weeks ago. And I think that it's going to be shortly quite clear that the president's role is, largely ceremonial, that there isn't likely to be a change in government or in leadership, rather, from the supreme leader, and that this will be carefully stage managed. Will there be, for example, a replay of the 2008-2009 Green Movement? Highly unlikely, and this regime has been all about suppressing dissent.
Ross, the other, of course, big news is that Saudi Arabia's crown prince postponed a planned 4-day trip to Japan because his father, the king, is sick.
Well, that's right. So we know that his father was in hospital. He's got a bunch of ailments. He's now back at the palace, but he's receiving treatment. And the fact that this was publicised suggests that he's actually in pretty poor health, and certainly concerning enough that the crown prince has delayed his trip to Japan. I mean, obviously, the Saudi crown prince has been the de facto leader for some time. He's been doing the day-to-day governing of the country, and you'd imagine he would be the immediate successor at some point for the king. But you never know with Saudi Arabia. We know these successions can get a bit messy. We know that suddenly there can be surprises out of the woodwork, and so nothing is guaranteed in Saudi Arabia until it's done. And obviously it's in the interests of the crown prince, known as MBS at this point, to stay home, very close to home, while we see what's happening with the king's health.
Yeah, Tina, I mean, this, as Roz is saying, it feels like, we could have, if not a surprise, certainly could change things in an already volatile region.
All of these developments are a great reminder that nobody controls the narrative, right? And the discussions about the state of Middle East risk and geopolitical risk more broadly are extremely fluid. We're talking about succession plans that have always been opaque, whether it's Iran or Saudi Arabia, being accelerated to the fore, in this case by, very aging leadership. In the case of Saudi Arabia, with a much clearer succession. It will be watched closely, of course, the potential passing of the king, but I don't think there's much question. What is at issue, though, is the talks that are underway with the Saudis and Israel and the United States about this path to normalization, and could the passing of the king interrupt that flow, or perhaps reduce the risk appetite for considering something like that? I'm inclined to say no, but it does put a spanner in the works for the diplomacy that's underway.
Thank you both for joining us. Tina Fordham, geopolitical strategist and founder of Fordham Global Foresight, and Bloomberg's EMEA News Director, Roz Matheson. Now, you can track all the developments on the story on our website, on the terminal. We have a wonderful, extremely interesting and insightful blog onto TLIV Go to get commentary analysis from our expert editors. Now, coming up, stocks waver while gold and copper surge to record highs. We'll have your markets wrap next, and this is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back. This is The Pulse. Of course, we're keeping a very close eye on all events in Iran after Iran's President Ibrahim Raisi has died in a helicopter crash. Now, we just heard from the Supreme Leader, of course, Ayatollah Khamenei, saying that the Vice President will manage the executive branch. He also says that the new presidential election will be within a max of 50 days. That is the law in the country, so we were expecting that 50-day delay. But looking ahead, Raisi's successor likely won't be able to count on oil production to power growth to the same extent. We just had a wonderful panel with Tina Fordham and Ross Matheson trying to explain really how things could change, whether they change, and of course, the big question at the moment, who will take over after the 50 days. Now, on to corporate news. Airbus, just in the last 10 minutes ago, saying that they will have secured an order for 105 of its narrow-body jets from Saudi Arabia's flagship carrier, as the kingdom also pours billions of dollars into turning the country into an aviation and tourism hub. Now, you can see Airbus gaining some 0.7%, nothing huge, but again, there's a big difference between how Airbus has been performing and, of course, how Boeing has been performing. On to markets, copper and gold prices have surged to all-time highs, with miners keeping Europe's stock benchmark afloat, oil holding on to gains as the market watches for any political fallout from Iran and Saudi Arabia, two of the world's major crude producers. Now, for more on all of this, we're joined by Beata Manthi, a global equity strategist at Citigroup Global Markets. Beata, as always, thank you so much for coming in. I mean, you're a great student of course, balance sheets, trying to understand some of the industrials, some of the industries that will do better, especially in your valuations. And then you have these big geopolitical events that could change forces. How do you incorporate these big events into how you actually measure valuations?
So how about this? We've been arguing that earnings delivery and fundamental strengths this year would be the main driver of the markets. But the biggest risk to the markets would be geopolitics this year, right? So, of course, geopolitical flare-ups in the times where markets are ripe and quite bullish and euphoric are always a risk for some profit-taking. But as long as margins remain strong and we see that earnings are being delivered, if not, there are even signs that they could be upgraded, I think it's still a constructive path for equities going forward.
So, Beata, what's the way forward here? I mean, again, a lot of talk, inflation is under control, question mark, because the markets seem to think that it is in the U.S., but there's been a lot of volatility. How much does it impact at European equities?
So we argue that it's going in the right direction, and especially in Europe, right? That means we are going to get the rate cuts out of ECB. We also think we are going to get rate cuts out of the Fed, that Fed will move ahead of inflation properly leveling out because they are worried about the slowdown in the economy more than waiting for the inflation to slow down more. So overall, we think, again, constructive setup for equities, and of course some market participants are worried about elevated levels of valuation, but of course that's really the case for the US equities, which means in the international setup the equities outside of the US, Europe being one of them, look increasingly more attractive.
So what would you buy right now? What are the big market forces at play that make you confident on certain sectors?
So in our global equities portfolio recommendations, we are overweight continental Europe and we are overweight Japan. What we like, so it's really pro-cyclical trade, right? And going forward, we think it's more about cyclicality, not value or growth. It's about being in the right sector. So, for example, in deep value, our favorite sector is metals and mining in Europe. And of course, it's getting the headlines today, as you've mentioned, right? And on the more expensive side of cyclicals, we like tech, for example.
And tech, we have NVIDIA earnings on Wednesday. How much does something like that actually also, permeate through European tech equities? Or is it, there's just a lot more to rise because of valuations at the moment in Europe?
So the case for US tech or US AI stocks has been that it's been priced for perfection, right? So all the eyes are going to be on how much particular stocks over-deliver in the reporting. Of course, it will have effect on the tech in Europe as well, but we would argue it's leveled down on the valuation expectations and market expectations overall.
Thank you, Beata. Beata Manthi stays with us, global equity strategist at Citigroup Global Markets. We have a lot more to talk about when it comes to market and corporates. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back, everyone. Now, still with us, Beata Manti, Global Equity Strategist at Citigroup Global Markets. Now, Beata, thank you so much for sticking around. You're still constructive on a lot of equities. What happens to margins in this kind of environment?
So margins is an interesting point. There's been lots of worries about margins rolling over. Of course, margins have been helped by strong inflation. Now inflation is coming down. Will margins come down as well? So we've just published a big piece with all the analysts in Europe taking their view on particular sectors. And really the biggest takeaway is, yes, we do worry about particular parts of margins. So we worry that costs remain high, and we worry that prices are moderating, right? So that could affect negatively margins overall. However, the positive side is that volumes are expected to go up at most of the sectors, and also organic growth is rising. So that means net for margins overall for the market and for most of the sectors, it's still direction up, but in a more moderated way.
But I find it incredible, given what we've seen in terms of interest rates rise, you know, through all of your great research, that you still see earnings per share to go up in this kind of environment.
So, of course, last year, if you put things in the context, in Europe, we had a borderline of EPS recession for European corporates, and global EPS was almost flattish as well, right? So it's about where we are coming from as well. And then, of course, in Europe, it's easier to argue that we are in this early cycle dynamics. Things are picking up. That helps that helps EPS, helps the margins. In fact, we actually see signs that our and the analysts' EPS growth for this year could be upgraded. So we expect 6%, and there are some encouraging signs of analysts upgrading against the seasonality patterns before the earnings season has started, which has a very good track record for earnings revisions to continue to be positive, and also the overall EPS going up. So if anything, perhaps our forecasts are on the conservative side for Europe.
Just stunning, given what we've lived through in the last 14 months. Thank you so much for joining us. Beata Manti, they're Global Equity Strategist at Citigroup Global Markets. Coming up, gold surges to a record high on Fed rate cut hopes, and silver actually hitting a near 11-year high. We'll be speaking to the Chief Executive of Wheaton Precious Metals. That's coming up next, and this is Bloomberg.
Names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal. to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Iran's supreme leader announces 5 days of mourning as the country's president and foreign minister are killed in a helicopter crash. Their deaths add a certainty or further uncertainty to a region already in turmoil. Copper surges to another record while gold also hits a new high. Investors brace for Nvidia's earnings on Wednesday. Plus, Ryanair warns that fares may be flat this summer and that Boeing deliveries of 737 MAX jets may slip further. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, we're just getting some breaking news out of South Africa. The Constitutional Court there has ruled that the former President Jacob Zuma cannot run as a candidate for Parliament in this month's election. Now, the decision by the nation's top court raises a risk that supporters of his new MK party will stir unrest in the run-up to the May 29th vote or contest the outcome. While party leaders have vowed to destabilize the ballot if Zuma is barred from competing. If you look at Rand, of course, the currency over there in South Africa, it's extending some of the gains. We'll keep a very close eye on any kind of development in South Africa. Our team on the ground is following the developments very, very closely. Now, let's also return to our top story. Iran's supreme leader has announced 5 days of mourning for President Ibrahim Raisi. Now, this after Raisi's helicopter crashed in a mountainous region in the northwest of the country. Bloomberg's Sylvia Westall joins us with the very latest. Sylvia, this was, I imagine, a bit of a shock to everyone because it was so unexpected. What do we know about what happens next? We heard from the Supreme Leader, Ayatollah Khamenei, that there will be elections in the next 50 days. Do we know who could succeed?
Thank you very much. Yeah, that's a very good question. So I think there is this question about who will succeed Raisi as the president and what could happen in elections. The general expectation is that that sort of power base will remain in the hands of hardliners like Raisi himself. He was brought to power by a hardline base, and that looks unlikely to change. That's the kind of direction that Iran's been on. But I think one of the bigger questions we're looking at as well is that Raisi was seen by many analysts as one of the possible successors to the Supreme Leader himself. He was a cleric, he had this judicial background. So now with the Supreme Leader in his 80s, there is the question about who will actually succeed him as well in that top authority role. So there is an open question about who will become president after elections, but also longer term, who will succeed the Supreme Leader as the overall leader of Iran.
Sylvia, the Russian President Vladimir Putin also called the crash an enormous tragedy and described Raisi as a true friend of Russia. What do elections and 5 days of mourning mean for stability in the region?
Well, at the moment, I think, the fact that the announcements have come quite quickly, the expectation is we will move toward that. I think, as I mentioned, there's great kind of questions open about the longer-term leadership of the country. We have seen that, Iran has been on this path of confrontation with the West. More broadly, we have the Israel-Hamas war and the actions of Iran-backed Houthis and other proxy groups in the region. That's unlikely to change with any change in the leadership. There is unlikely to be this continued stirring and turmoil in the region as the Israel-Hamas war continues. And there's unlikely to be too much change in foreign policy. What has been interesting is that during the recent period, there has been a rapprochement between Iran and Saudi Arabia, who have long been these great Middle East rivals. And there's a question about how that will continue and whether that will be continuing force in the region. And that has brought some kind of longer-term stability, at least regionally right now. with this backdrop of the war as well.
Sylvia, thank you so much for joining us. Bloomberg's managing editor for the economy and government for Russia, Africa, and the Middle East, Sylvia Westall. Now, you can track all the developments in the story on our website, but also on the terminal. We have a really fantastic blog. Go to TLIV Go to get commentary and analysis from our expert editors as we try and understand the political and global ramifications of what's going on in Iran. Now, gold has surged to an all-time high, boosted by optimism that the Fed will start easing monetary policy this year. Silver also trading at a near 11-year high on supply constraints. Now, for more, let's speak to Randy Smallwood, Chief Executive of Wheaton Precious Metals. Randy, thanks so much for joining us. I mean, there's so much going on in the metals, and you're a listed company, you're a big company, and basically you facilitate payments so that you, I guess, understand, maybe quicker than others, about what kind of demand there is for some of the precious metals.
Well, yeah, we're a streaming company, so we invest into mines. We don't actually operate mines, but we're focused on the precious metal space, as the name implies. But it does give us a broad exposure because we invest into the new mine construction. We supply capital around the world, and there's just not a lot of new production. So the supply side is getting squeezed pretty tight, and there's increasing demand all over the place.
So what happens to copper? We had some wonderful conversations, for example, with Jeff Curry, ex-Goldman Sachs, now Carlyle, saying, look, we're running out of everything. Yeah. Is there a danger that there's now going to be then overcapacity or too much investment, and then there's going to be too much copper? Or is there not one thing as too much copper?
The expectation in terms of needs for copper, in terms of electrifying the world and the way that we want to move forward in this world, there's just not enough copper available for the next while. And so, one of the challenges is it's getting tougher and tougher to build mines, to build new mines, in terms of permitting and building them in your backyard. Nobody wants a mine in their backyard. Unfortunately, we all want to consume the product, and so that just keeps on going. And so there's been a lack of investment into the space, and I think that's finally what's going to give us a squeeze in this market.
So, Randy, when you look at, for example, higher gold, higher silver prices, what does it mean for a company like Wheaton?
Oh, it's pretty good. We've got good, strong growth. Our company has got about 40 to 50% growth over the next while. So we're going to climb close to 1 million gold equivalent ounces per year of production. And of course, with higher prices like this, especially with a streaming company, because our costs are fixed, we're not a traditional mining company in the sense that there's no cost risk on our side. Our costs are defined by the contract itself. And so this upside in prices is delivered directly to our shareholders. And it's one of the reasons why we're also seeing record Wheaton share prices right now. So
I know. I mean, I'm looking at your market cap is over $25 billion. But when you look at what's sustaining the price of gold right now, so part of it, I don't know how much of it is demand, but part of it is basically central banks saying treasuries have a political aspect. Let me sell off treasuries and buy gold.
Right. Well, it's, I think what we saw is the U.S. dollar, which is generally considered the main reserve currency of the world. Over the last few years, it's had some cracks in the foundation, so to speak. We're not talking about the fiscal mismanagement. We're talking more about the fact that it's a political instrument. And so there's an increasing appetite for gold from all sorts of sovereign central banks around the world, especially out of the Middle East and out of the Far East, China. There's a constant drive, both at the central bank level, but also at the retail side. And what I see, and especially with seeing silver move over the last couple of weeks, we're starting to see silver pick up. Yeah. Is I think that interest is spreading. It's spreading to the west.
But so you make 40% of your revenue from silver.
Right.
What's sustaining silver right now? I mean, it's a different story to gold. This is not an inflation hedge, is it?
Well, so silver's it's a precious metal, but it's also got it's one of the most critical minerals out there in terms of high efficiency. It conducts electricity better than any other metal. So the more silver we have in our phones and in our mobile electronics, even in our cars, the more efficient they are. The better power you get, the longer your batteries leave. So there's an increasing demand for silver as we try and get more efficient around the world. So silver's got both that and the precious metals demand, and that's what we're seeing now is starting to be a pickup in the precious metals demand.
Randy, do you have a very clear idea of how much more copper, how much more silver we need for the energy transition? So if we're staying on this trajectory, is it 40% more copper in 10 years, or is it more?
Yeah, I would say it's more than that. I mean, really, it does come down to how fast do we accept electric vehicles and swing over to that. That's the big demand driver on that. But it is the technology side, though, too. As we want to get to the Internet of Things, it all has to be connected somehow. So copper needs to play a role in that. It really comes down to how fast can the world afford to go forward. But what we need to do is start building some new mines and not shutting them down, not having challenges with respect to permitting. It's getting tougher and tougher to actually find the new deposits. I know that because our company is at the leading edge of funding these new mine developments, and we're just not seeing the same number of opportunities that we've seen in years past.
Can you do it in a green way? Is this a concern? So is it government permits trying to, keep a lot of the riches for their own country, or is this, ethically concerning for green issues?
Well, and the challenge is we need the materials. And so I don't think any of us we're always trying to improve in terms of how we actually produce the materials that the society needs. We need these materials. I would much rather produce these materials in well-regulated, well-administered jurisdictions than to ship it off into jurisdictions where you don't have that same level, right? So it's way better to control that production in backyards where you have good, strong environmental regulations, good, strong social requirements in terms of that. So I'd rather produce it in good, clean, green areas where you actually get that going forward. But we just need that support.
Randy, any M&A? I know you've been pretty acquisitive in the past. What's on your mind now?
Yeah, I mean, for us, it's about new opportunities, new assets to help fund. In terms of trading for the peers itself, we've seen enough opportunities to help fund new mine construction. That keeps us busy, so we don't see anything on that side. Okay,
Randy, great to speak to you. Thanks so much for coming on. That was Randy Smallwood, Chief Executive of Wheaton Precious Metals, with a market cap of over $25 billion. Now, coming up, the European Reconstruction and Development Bank faces challenges from natural disasters, conflict on multiple continents, and sticky inflation. We're discussing those challenges with Odile Renaud-Basso, who has secured a second term as the bank's president. That's next, and this is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Now, a range of crises, including conflict on multiple continents, natural disasters, and sticky inflation, have put pressure on the resources of the development banks around the world. Well, one institution, the European Bank for Reconstruction and Development, has committed to investing billions in Ukraine after managing to offset the significant loss it sustained in the wake of Russia's invasion. Now, the bank returned to a net profit of 2.1 billion euros in 2023, which was also a record year of investment for the organization. Well, to discuss all of this, I'm delighted to be joined by the EBRD's recently re-elected president, Odile Renaud-Basso. Thank you, Madam President, for joining us. I know the EBRD has just had their annual conference in Yerevan. There are big issues in terms of your funding, members. It feels that the world is much more volatile. It's much more concerning. What does it mean for a bank like yourself? Is it more difficult, or do you feel like it's more important to be there?
Both. I think it's more important to be there. It makes our role more important than ever, because I think that we can help stabilizing and help countries dealing with emergency situation, be it, wars or natural disasters, but it also makes it more challenging. And that's why it was very important for us to get the support from our shareholders, and we got a decision to have a capital increase to give us the financial strength to be able to deal with this volatility and to continue to support our countries of operation, including Ukraine, in front of the challenges they were facing.
It's extremely difficult to talk about a reconstruction of a country that's still at war, because you don't know where it ends up, and we don't know how many years it will take for that to settle down. What are some of the conversations you're having?
No, I think our focus is very much to support Ukraine now, and of course to be able to do more in reconstruction. But indeed, currently, Ukraine needs, of course, military support. They also need budget support, because they have a huge budget effort needed to finance the war and to keep the state functioning, and they need economic support, and that's what we are providing to keep private sector afloat. And last year we provided 2 billion of financing, 2 billion euros of financing. Half of it was for the private sector to keep, working capital for business, trade finance, and provide financing to rebuild facilities, logistics capabilities, and so forth. But also half of it is for the infrastructure, energy, electricity, transportation, railway, and so forth. And this is very important to keep the economy functioning, generate revenues, keep jobs for people, and that's part of the effort we need to do for Ukraine.
Ukraine just also got a big package from the U.S. What happens if the U.S. stops funding Ukraine in a couple of years? How much more bandwidth do you have to step in and support?
The support from the U.S. is very important, and it's a very positive news for Ukraine, and I hope that the military material will come very quickly. And this is continued effort. So I think with the package, this gives some visibility, but continuing the support will be absolutely key. You have also the EU package, which now is in place. So all this is important to keep the country going.
The bank was really started as a lender for ex-communist world, and now you're expanding into other areas. But how worried are you about what's going on in Georgia? We spoke to the president. Actually, let's listen to the president on Friday with this law that is named the Russian law, and what that means also for civil liberties. Here she is.
We might be losing a very important chance, and that chance might not come back in the future. And that would be the responsibility of the government. So there is concern in the society, there is concern among our partners.
And the concern, I imagine, does it make it more difficult to the EBRD to try and step in?
We provide some financing to Georgia, but we are concerned with the development. Georgia has been a country which huge impetus for reform, and a very dynamic economy. But of course, the geopolitical development and the decision and this law creates a lot of uncertainty because of on economic situation, and you've seen some impact on the value of the companies, the banking sector in particular, but also in the EU prospect. And I think that creates a lot of uncertainty, and we're worried by this development.
Do you worry about a pattern actually in some of these countries of Russia taking hold, or prime ministers that want to reflect and maybe even mirror what's happening in Russia?
Each country in a very different situation. We were in Armenia, it's a very different dynamics, a very, strong willingness to develop relationship with Europe. So each country are in a very different situation, but indeed Georgia is quite in a worrying point.
Talk to me about, so you're expanding really, you have plans for sub-Saharan Africa. I think we have new member states, Kenya, Nigeria. What do you see as some of those challenges?
So that's a very exciting new chapter for the EBRD, because it will be new geography, and the challenges are, the demographic dynamics are very important. So the key will be to create jobs. That's why our mandate, which is to develop the private sector, is so important, because you create jobs by small businesses, big businesses, private sector investment. So that will be one of the key challenges we will be trying to help with, as well as climate change, because the continent is very much affected, and financing adaptation, mitigation, and so forth will be very important.
Is it more difficult now to talk about climate change and the transition, given all of the geopolitical uncertainty, but also the fact that many companies, private companies, no longer really want to talk about it because they fear of repercussion from the U.S.?
On the one hand, you see some pushback and some pushback, really, but on the other hand, when you see the reality of what's going on, droughts, floods, and so forth, the reality of climate change is also much more visible, and the acceleration of the crisis is there. So I think there is also a feeling of need to address it more quickly and definitely. So I mean, it's not a unified trend, but I think that from a bank like us, this is a clear priority, and we are going to continue to step our investment in this area and to try to bring private investors together with us. And we see the positive news is that the cost of renewable, for example, has been decreasing very, very significantly. So this is becoming a very cheap source of energy. So there is a big trend, and it's a big opportunity for a number of countries in south of the Mediterranean, in Africa. That could be a huge opportunity also.
And you have the right investors. I mean, how do you see, again, is it investors matching with politicians and policies, or if you look at all the challenges actually for the transition, is there a sticky point?
I mean, the sticky point is to find the level of private financing that is needed, and so to have the risk appetite to invest in countries that are perceived as more risky, but also you need to bring private investors and to address some public policy elements, for example, because if you want to develop renewable, you need to have the grids, and this very often is public sector investment, and you need to have this very clear strategy, ambitious strategy, so as to have all the elements brought together and to really be able to develop and to expand these green energy sources.
I mean, in the last 10 years, some of the institutions, the big institutions, the World Bank, even the UN, have been challenged, mainly by President Trump, but also a number of other actors on the world stage. Has that hurt what you can do on the ground?
No, it doesn't hurt. I think that what is a challenge for the MDBs, Multilateral Development Bank, is more that if the country is fragmenting and tension, I mean, the impact of geopolitical tension it creates, of course, some challenge, because by definition, multilateral banks are there to create common views, common consensus, and working together. But that's why also we are much more important even now, because we are a space where common decisions can be taken, and we have common challenges for the world that needs to be addressed collectively.
Do you think there's a collective narrative, or at least that a lot of your member states, have a common goal? This was the worry 4 or 5 years ago, that everyone was kind of splintering, so it was difficult to have a cohesive structure or narrative.
But for example, our shareholders took the decision to increase our capital so as to be able to support Ukraine and all our countries of operation, and this is a very strong sign of unity and of cohesiveness. So that's a very positive sign, I would say.
Thank you so much for joining us. That was the President of the European Bank for Reconstruction and Development, Odile Renaud-Bassot, joining us this morning. Coming up, Ryanair meets full-year estimates but says it might need to discount tickets to spur bookings. More on that next, and this is Bloomberg.
This is Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Well, Ryanair shares are lower this morning after reporting full-year earnings. Despite meeting estimates, the Irish airline says ticket prices may be flat to modestly higher. Now, it says it's having to discount fares in 3 months to June in order to spur bookings. Well, let's get more on the story with Bloomberg's Sid Phillip, our expert in all things trains and planes and automobiles. So what do these earnings, Sid, good morning, what do these earnings actually mean for the rest of the industry during the critical summer months?
Morning. So Ryanair is already a bellwether for the European summer travel demand. And summer is really when all the European airlines make their money. And so for Ryanair, this is the most crucial part of the year. And it sort of gives us an indicator that sort of the revenge travel boom, where people are willing to pay anything for air travel, may be coming to an end, and people might be sort of holding out for better deals, and they may be holding out for better prices, and people aren't really willing to spend as much as it takes to get to the beach this summer.
So what does it mean for these airlines? Do they have to offer discount tickets?
It does. I mean, Ryanair is already saying that they have to discount tickets in the first quarter, which is the quarter until June. And I think that sort of really gives them a sense of the fact that the demand is there is still demand, but not demand at any price. And the rest of the industry is going to be watching that to see how it plays out for the rest of the summer.
And then, Sid, big news from Airbus. So they won a big order from Saudi Arabia.
Yeah, so Airbus won an order for 105 Airbus narrow bodies from Saudi Arabia. Saudi Arabia is trying to build up its aviation industry. They're trying to build up a domestic and international industry and sort of reduce their reliance on oil. And so for Airbus, it's a big deal because they get the sort of, they already are big in Saudi Arabia. This gets them even bigger, and it sort of also shows the remarkable demand for the A321. I mean, the Saudis said that they were hoping to get more planes, but Airbus doesn't have any more planes to sell, so Airbus is in a tricky place in terms of trying to meet the demand for their planes.
So interesting. Sid, thank you as always. Sid Phillip, they're our aviation expert. Now, later today, Bloomberg is also speaking to Michael O'Leary. It's never a dull interview. The chief executive of Ryanair on those earnings at 1:15 p.m. UK time. Well, Bloomberg Brief is up ahead. Menace and Danny talk markets, and of course they talk geopolitics. This is Bloomberg.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, the electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Good morning from our global headquarters in New York. I'm Manus Cranny with Denny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Iranian President Ibrahim Raisi and other officials die in a helicopter crash. Intelligence agencies tell the U.S. there is no sign of foul play. Copper ores and gold soars. The metals hit record highs amid a haven demand and a short squeeze. And it is another busy week for investors, a marathon of Fed speak and NVIDIA results as the earnings season winds down. Good morning, Manus.
Danny, a very good morning. Yeah, we're counting down the NVIDIA results. That'll be on Wednesday. The market's already positioned with options trades for plus or minus 8%. So NVIDIA could be the bid that you need to take us through. 14 of the 20 major stock markets are making record highs. Mike Wilson has finally capitulated. There's going to be a sunny macro environment. We'll talk about more on that in a moment. He's gone from 4,500 to 5,400 on his target. There's clarity on the disinflation. We've got a little bit of green here. We've put on $12 trillion in value since the October low. So you are looking at 53% of that rally on 5 stocks. That's what you call concentrated risk. 10-year government bonds are flat at the moment. 442 is where we are. Globally, we're on for the best month of 2024 on 10-year paper. Bank of America say anything but bonds, that narrative will fade. That's more so on the investment grade. Look at a decade high on the JGBs. We'll talk to Derek Halpenny in just a moment. 10-year high. Swaps are saying 57% probability of a hike in July. So we've got to work it out in terms of what are the next steps to calibrate for dollar yen. Danny, good morning.
Good morning, Manus. Just to linger on this idea of Mike Wilson finally capitulating. I mean, the man has been bearish for so long, so I think we need to stop and take stock of this. As you say, they're talking about the macro environment. A clearer path of disinflation growth and policy over the next few months sets up a constructive outlook across the market. I think there's also this idea that it's getting harder to fight the momentum. Brian Belsky of BMO also upgraded to 5,600 too. That is a street high. The same idea, you can't fight the market momentum. But Manus, to some degree, the data is confusing. So a clear path, but on the other hand, Mike Wilson also says that the data has been uneven. So there's still some hesitancy. It's a hold your nose and buy kind of market.
Yeah, but if you look at volatility, again, the momentum has been, we need to debate whether you go beyond those 5 stocks that delivered 53% of the $12 trillion rally. VIX is at the lowest since 2019, and that sort of says we've had a number of people come on and say, buy volatility. It is so repressed. It is something there. But you've got the animal stocks and meme stocks. You've got a real momentum. I mean, plus or minus 8% on NVIDIA. I mean, that's what you call a swing day for the voters out there. Get the pump?
Yeah, but it hasn't just been tech that's leading this last leg higher, Manus. It's things like utilities. It's also things like healthcare. Small caps also had a good
and
week.
Utilities. You did your MR, you did your GRR.
Well, but part of the utility story is also weirdly a tech story. People saying that AI is doing well there. So it is a broad base, but again, how much of it is just AI excitement? And Manus, in all of it, we also saw the dollar too. It had a steady drop post-CPI. Derek Halpenny of MUFG writing the following: the US dollar is close to a turning point. We are forecasting 4% depreciation of the dollar, and recent price action has increased our conviction in our call. Derek Halpenny joins us now. Derek, thanks so much for being on with us this morning. Good morning to you. Okay, so you say the price action is supportive. What else gives you conviction on the dollar easing?
Well, I think the narrative has started to change again, because it wasn't so long ago when there was this kind of anticipation of a big divergence trade. And really, you know, we've been lacking divergence. It's incredible to think that since the beginning of 2023, 90% of the time, euro dollar has traded between 105 and 110. So that's pretty incredible. And I think, having been in this kind of US yields higher for longer, divergence is coming, the ECB are going to be cutting rates, we've shifted back again. And as you said, the dollar has lost that upward momentum, and we've reversed on the back of that. And what gives me more conviction is the story globally, and in particular in Europe. And it's one of the reasons why we think the dollar is going to struggle to strengthen on a sustained basis, because we're through the inflation shock by and large in Europe. And we're now seeing the positive consequences of that in terms of better data. We're not booming, of course, but it's a lot better than where we've been over the last 18 months on a macro basis in Europe. And that's certainly supportive for the likes of the euro and the pound.
Derek, good morning to you. So if the supremacy of rates, of rate differential, and if the supremacy of exceptionalism, US growth exceptionalism, perhaps are going to be challenged, how does that reverberate? So we dispense with the parity calls then. We'll have Jane Foley later on, so we'll put what you say to her. But so that parity call goes for euro dollar, but what does that do to those other higher beta currencies?
Well, I think for the higher beta currencies, again, you've got to go back to what's the global growth view here. And of course, one of the key consequences of falling inflation in the US, if, again, we're at a turning point after the more favorable CPI that we had last week, if that is the case, it raises considerably the prospects of cuts and therefore a soft landing in the US. And if we raise the prospects of a soft landing in the US, then the global backdrop is a lot better, especially in Europe now with the inflation shock over and picking up, and indeed China putting the foot down and implementing more stimulus. So the higher beta currencies, in circumstances of Fed cuts and a reasonable global growth backdrop, should be very positive for the likes of Aussie, CAD. Those kind of higher beta currencies should do better.
Derek, how many cuts do we actually need to see that? Because at the moment, the market fully pricing into cuts, that has gone back and forth. There is some volatility of the data. How many do you need to see, not even just this year, but next year, to have that story play out? Is just one cut enough, for example?
No, you know, we expect 3 cuts from the Fed this year, so we're certainly expecting a lot more than what's priced in at the moment. So that definitely gives us the impetus for a bigger move to the downside in rates in the US, and is, of course, an important part of that view on the dollar later in the year. And then again into next year. So, you know, you either have a view that inflation is going to be problematic on a sustained basis and we don't get very much, and therefore that's a lot more challenging for global growth, or your view is that we can actually go back towards inflation targets generally across the advanced economies, and a lot of the inflation problems that we had were specific to supply side factors that have subsided. And I would be more in that camp, certainly over an 18-month, 2-year time horizon. If you go 5, 10 years, the structural issues that everybody speaks about in terms of the greening of the global economy, supply chain fracturing, yeah, those are inflationary, but I think the cyclical forces are more powerful over certainly the next couple of years.
You haven't been to the local coffee shop that I've been into then lately, Derek, to sort of understand the concept of inflation, 25% higher in the space of a week. But I leave that thought with you. That's called price gouging. Let's talk about the Bank of Japan. We're making 10-year highs on JGBs this morning. The debate will be the efficacy of the jawboning and the theoretical intervention that we've seen. The market says a hike in July, 57% probability of a hike in July. Is a hike enough to put a floor in yen, or is there going to need for more aggressive action from the Bank of Japan?
Yeah, good question. In terms of a floor, it could certainly have an impact on that. Of course, it's not just we're expecting 15 basis points in July, but with the communication that makes the market think that there could be another hike before the end of the year, and that possibly we get up to a range of 40 to 50 basis points around the turn of the year. In those circumstances, even ignoring the Fed for a moment, I think that will certainly help to curtail the selling of the yen. The risks would still be there because, of course, the big player in the divergence, from a relative change perspective, is always going to be the Fed. That's obvious. But I think certainly a more hawkish BOJ, and I think the markets are underpriced for what's coming. And we've had some very important communication changes from Governor Ueda after his meeting with Prime Minister Kishida the week before last. He gave a very hawkish speech in Tokyo on Wednesday the 8th. And I think that's indicative of a bit of a shift from the BOJ, a bit more focus on FX, but seeing the backdrop anyway that justifies a more hawkish, more active BOJ going forward. And as I said, the market's kind of missing some of that, I think.
Okay, well, let's see what comes down the pike for us. Derek, thank you so much for joining us this morning. Setting the agenda, Derek Halpenny there of MUFG. And don't miss our exclusive interview with the Atlanta Fed Financial Markets Conference later today with Bloomberg's Mike McKee and the Atlanta Fed President, Raphael Bostic, at 7:30 a.m. Eastern. And the Cleveland Fed President, Loretta Mester, she comes at 2 p.m. So then it's going to be interesting to see what they've got to say.
Yeah.
Other top stories on the terminal this morning. This is what we got for you. Activist investor Elliott Investment Management is said to have built a large position in lagging industrial giant Johnson Controls. Now, the hedge fund's position is worth more than $1 billion, putting it in the top 10 investor slot. Elliott's intentions for the stake couldn't immediately be learned. Several of the recent investments that they've made have led to major C-suite changes.
Shares in Keystone Studios rose the most since they went public. The Dublin-based video game studio disclosed that it's in advanced takeover talks with EQT. The deal could value the company above $2.5 billion.
Beijing hinted it could retaliate against the European Union in a trade dispute. It shows signs of following the same path of escalation between the US and China.
Coming up, Iran's President Ibrahim Raisi dies in a helicopter crash. We discuss what's next for Iran and the regime.
And metals move. With gold and copper surging to records, we track the moves. Context matters on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
South Africa's most important election since the end of apartheid focuses on infrastructure challenges, economic growth, and political fragmentation. Bloomberg's Jennifer Zabasaja reports live from key battlegrounds in Johannesburg, Cape Town, and Durban.
We think that South Africa is an exciting part of the world.
South Africa is a thriving and vibrant democracy.
There's a lot of expectation for the election.
Coverage begins May 27th on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Manish Krani alongside Danny Berger in New York. Now, the Iranian President Ibrahim Raisi and his foreign minister have died in a helicopter crash. State media confirming that the wreckage has been located in the mountains to the northwest region of the country. Joining us now on set is our senior editor. It is Bobby Ghosh. Bobby, thanks for joining us. I mean, you've just returned from Qatar, from the Qatar Economic Forum. Here we are. Iran is the nexus of many policies. Just give us a sense. This is both the leader and the foreign policy leader, Ibrahim, who I met. Foreign policy and domestic policy, where is the greatest impact from this loss?
I don't think there'll be a great deal of change in foreign policy. We have to remind ourselves that the president of Iran is not the most powerful person. He's the second most powerful person. The most powerful person, the person who pulls all the strings that matter, is the supreme leader, Ali Khamenei, who's unelected and who's been there forever and is still there, is 85, is ailing, but still pulls all the strings. So there's unlikely to be any change in foreign policy or anything to do with the outer world. But within Iran, within the establishment of this regime, there will be a lot of churn. Ibrahim Raisi became president in 2021, very unpopular. It was one of the lowest turnouts historically in Iran. A lot of blood on his hands. In the late 1980s, he was responsible for basically the murder, but let's say execution of thousands upon thousands of political opponents of the regime. Not a popular character, not a lot of charisma, not a lot of credibility. But he was the supreme leader's chosen president. And a lot of people felt that he was very likely to become supreme leader himself when the time came. So there will now be an opportunity for others within the Iranian system to raise their hand, and we have 50 days before there's an election. We'll see who throws their hat into the ring, but there will be a certain amount of domestic churn.
I mean, it comes, 50 years since the revolution. As you mentioned, it's a very aging leadership and a very young population. Yeah. Is there a sense, as this is happening, of fragility within the regime?
Well, this has never happened in Iran. A sitting president has not died. So it's a new situation they face. As with, 50 years is not a very long time for a country. And with a regime like this one that is sort of very, very determined to show that it is stable, that it has continuity. This is a challenge that they have never really faced. So there will be an effort to get everybody to close ranks behind the regime, at least all the regime figures. There will be an effort to try and get some sympathy out of this sudden tragic end to this figure. I don't think it'll go very far. Iranians have shown over and over and over again that they are fed up with this system of government, with the theocratic state itself. There will be some stage-managed events in which people will come out and shed tears. But in private, not a lot of Iranians are going to be shedding tears for Ibrahim Raisi.
No, let's just pivot to Saudi. Obviously, there was a rapprochement between Saudi Arabia and Iran. It's an uncomfortable realignment, one could say. In Saudi Arabia, we understand Mohammed bin Salman, the crown prince, has cancelled his trips to Japan as his father, the king, King Salman bin Abdulaziz, is suffering from inflammation. Now, we know that the king has been ill on an ongoing basis, but what is the more important kernel here? Jake Sullivan met with MBS over the weekend. Talk us through the issues of a king who is ailing and a crown prince that's trying to bring a security resolution across the line.
Well, in Saudi Arabia's case, there is no real transition. Salman is crown prince. He has been behaving effectively like the ruler of the kingdom for a long time. His father has been ailing for a long time. King Salman is 88 years old. He has been an invalid for a while now. So I don't expect any real turbulence in the transition there. For all practical purposes, MBS, Mohammed bin Salman, has been running the country. You know, and so all his policies, all the policies of Saudi Arabia are effectively his policies. And he made a sort of deal, it's a little excessive to call it a peace deal, but he certainly made an overture to Iran, and Ibrahim Raisi was the person at the other end of that negotiation. I don't think that will greatly change the calculus now that Raisi is dead, because again, as I say, the person controlling Iran really is the supreme leader, and whoever he appoints will probably continue the policies of his predecessor. So not a lot of change there, I don't think.
Okay, well, you have, it does feel like this moment, Bobby, I mean, it's a lot of tensions, a lot of all-out war, a lot of hot war, and at the same time, you have Israel's war cabinet also in the middle of a dispute, too. You have some people saying, look, Netanyahu, you haven't made an appropriate plan for what happens in Gaza after the war. What does it mean to have this moment of turnover in Iranian leadership, of concerns of health in Saudi, and at the same time a war cabinet in Israel who is starting to diverge on opinion?
Well, it's not good in a region of so much turmoil at the moment. As you say, there's a hot war going on in Gaza. We saw this one coming, didn't we? We saw a growing sense of disillusionment within Netanyahu's cabinet about the absence of a day-after plan. And by the way, this is something that the Biden administration has been asking for pretty much from the beginning of Israel's offensive in Gaza. Over and over again, the president, in private and in public, has asked to see some sense of what the Israelis want to do after they have achieved their war aims, and that's not been forthcoming from the Israelis. Now, the fact that senior figures within his war cabinet are openly saying this that's a serious rift. Bibi will probably survive this. There is still a war. Countries tend not to want to change their leadership in the middle of the war. He is a hardliner. He has plenty of support from his right. And overall, in the political landscape, the right is the dominant faction in Israel. Right. So I don't, absent a black swan event, I don't see him being undermined by this. But it's certainly not a good look for Israel in a moment of crisis.
Bobby, wonderful analysis as always. Thank you so much for joining us this morning. That's Bloomberg's Bobby Ghosh. Okay, coming up, we're going to have a look at some of your top headlines this morning here on Bloomberg.
Names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking. and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
It's Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. All right, Manus, let's get to some of our front pages. What's making headlines around the world? I want to start us off with the FT. So they have a story about Taiwan's new president, Lai Ching-te, who's been sworn into office. Of course, there are high tensions in the Taiwan Strait, as it feels that there are everywhere in the world. It also comes as a time of heightened tensions between the U.S. and China. But the new president has called on Beijing to achieve peace and common prosperity.
Yeah, it's certainly a very contentious thing for the world to deal with in terms of chip supply. Next up, let's take a look at the Journal. We both sort of lingered on this. The Fed and two other regulators moving towards the new plan that could add 20% in terms of additional capital to the banks. But of course, the banks really pushed back, led by Jamie Dimon at JP Morgan, saying the proposal was onerous. We now understand that the regulators, they're still negotiating. But if you just look into this story in the Journal, this is Dimon and his reach. I mean, at a conference last year, he said, what person in their ivory tower thinks that it is a rational thing to do in terms of the additional capital? But we also learned how many meetings he had and other bank CEOs had with Fed officials.
This is Jamie Dimon as diplomat just as much as CEO. I think it's also interesting what it means for the bond market. There's been concerns about more volatility because banks can't trade as much because of balance sheet constraints. All right, Manus, let's just leave on this on the Bloomberg. Jeff Bezos' Blue Origin resumed sending tourists to space yesterday. They launched a couple people, 6 people, I believe, yesterday. You know, next they want to go to the moon, Manus. Would you do that?
I go to the moon. I go to the moon and the stars with you every morning. That's what we do on this show every day. There you go. I'd even pay for a ticket to send you on that.
Really?
Yeah.
you won't buy me a Birkin, but you'll buy me a flight to the moon.
Anything for peace and reconciliation on this show. Next up, Jane Foley from Rabobank joins the team.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From our global headquarters in New York, I'm Danny Berger alongside Manish Krani. Let's set your agenda.
Iranian President Ibrahim Raisi and other officials die in a helicopter crash. Intelligence agencies tell the U.S. there is no sign of foul play. Copper roars and gold soars. The metals hit record highs amid haven demand and a short squeeze. And another busy week for investors with a marathon of Fed speak and NVIDIA results as the U.S. earnings season winds down. Danny, good morning. Counting down to NVIDIA.
It is the macro event of the week, because besides that, all you really have are Fed speakers. And let's be honest, they're all saying the same thing. So how much of a macro event really is that? So in the meantime, markets hanging tight, little change on your S&P at just above 5,300. 4 consecutive weeks of gains for stocks. That is the best winning streak since February. 10-year yields, little change, maybe lower by, let's call it a basis point. 4.41 is where we stand so far this morning. They are down 26 basis points so far this month. We ticked a little bit higher to end the day on Friday, but that didn't change the overall trend for the week. Is the anything but bonds narrative coming to an end. Finally, LME copper up more than 2.5%. It is a speculative short squeeze happening on the COMEX. Gold also joining the party. Maybe some haven bid at a record gold is trading at the moment. But Manis, I think really the limits of the gains we're seeing in markets today show the difference between relief and surprise. Last week, the data was one of relief, not of surprise. So you can have a market that is able to rally somewhat. We can get to new highs. Bonds can come in. But the shift you need to see is something that Derek Halpenny was talking to us about. You need a Fed that is really starting a cutting cycle, because in order for them to do that, the other central banks, the ECB, the BOE, they can have their rate differential shrink, and they don't need to worry about their currencies as much.
No, the differential argument from Derek is that it will narrow, and that puts a floor under the euro. You've seen real resilience, which is something that Jane Foley, who's joining us in just a few moments, has said really quite often. I thought it was interesting when it came to the Bank of Japan. You see those JGBs at a 10-year high. We saw that spike at the longer end of the curve last week. So what is the Bank of Japan going to do next? Is it more jawboning along with the Ministry of Finance? But they are under pressure, and Halpenny says 15 basis points of a hike in July, 40 to 50 basis points by the end of the year, and that we're all underpricing the action from the BOJ.
I mean, it's interesting to see the market's excitement, yet they didn't cut bond purchases again on Friday. That's something that folks had expected. It didn't happen. But we do know Ueda, after talking to Kishida, came out with a different tone, a different kind of pivot, saying, look, we do need to worry about FX and its transmission into the economy. That is not what he used to say. And I think that's part of the shift, which Derek noted, that the market hasn't fully come to appreciate.
No, but it will all be done. I mean, there's a palpable sign of relief probably in the Japanese houses of the Ministry of Finance and the Bank of Japan when they saw that CPI from the US last week, which takes us to what markets are waiting for. A deluge of Fed speak, softer than expected inflation data. Rabobank's Jane Foley weighing in on the potential impact on the dollar and writing this, that while the dollar is likely to lose some support once the market is certain that the Fed rate cuts will come, we expect the downside potential in the greenback is likely to be limited. In short, our view is a broad-based dollar strength could prevail for some time. Contrarian, Jane Foley versus MUFG and Derek Halpenny. Jane, good morning to you. We've got Derek talking about a 4% drop in this dollar. You say that even though that rate-cutting cycle will begin, you see a rise of protectionism as being the alpha restricting the not demise, but the drop in the dollar.
Yeah, you know, I think this is all linked to the rise in protectionism and, of course, the change really in globalization and what that really means for emerging markets, because usually we have the dollar inversely tracks emerging markets really quite well. So when emerging markets do well, then the dollar does poorly, etc. But we've come to this change in geopolitics and this change for capital flows. And, you know, we had the IMF in the spring meeting suggesting that the share of capital flows that the US is getting is far higher. It's gone up to about 33% from about 18% before the pandemic. And of course, you can link that to, you know, Biden's Inflation Reduction Act and to, you know, his want to get manufacturing back home. And of course, that is probably going to be extended if we do get a Trump presidency from November. So we think for dollar flows, well, yeah, you know, much more remaining in the US and a lot less going to emerging markets. And that we think is likely to keep a floor under the dollar. Although, yes, it will lose some ground once the Fed does start to cut interest rates. And yes, emerging markets investments will look more attractive once that starts to happen. But on a relative basis, you know, compared with what models say fair value is for say, euro dollar, I think the dollars can stay overvalued for a while.
Well, again, Jane, it's interesting to listen to the core of what you're saying. You mentioned the Fed there, but it's not the biggest factor. We were talking to Derek, it was about the Fed. To be fair, most people, when they talk about dollar weakness, it is about the Fed, it's about the economic data. So are we overly concentrating on that and trying to divine the dollar's direction?
Yeah, you know, I think you've got to differentiate from the short term and the bigger picture. And I think, you know, the short term, yes, you know, all year, you know, we're totally focused on the Fed and when are they going to go and who's going to go first and when's the second move's going to be. And that is all clearly very, very important. But I think if we take a step back and, you know, we take a look at the flows, I mean, look at the outperformance, for instance, of US stock markets. Look at the higher productivity levels that we have in the US. And again, look at the protectionism and the want for Biden to get those flows, get that investment back into the US. So all of these are part of the bigger picture. And I think the Fed, et cetera, is the shorter term picture. And you know, that will create the volatility on a daily level, on a weekly level, maybe on a monthly level. But overall, the big picture, I think we've got to consider that perhaps potentially a little bit separately.
Well, if the alpha is protectionism in whatever format going into 2025, despite the cuts from the Fed, one piece that really caught our eye was from Dudley, the former New York Fed president, and he said this, and he's talking about a Trump presidency, and the risk is that could Trump take over the Fed? It's a scary thought. It's not an easy single president to undermine the central bank's independence, but the mere attempt to do so could do a lot of damage, can do a lot of damage. So I put it to you, I mean, it's one of those out there left tail risks, but how injurious to the very narrative of dollar supremacy could something like that be? Do you talk about that on the floor at the moment? Is that just, oh, they've written another cracking article on Bloomberg, or is it something that you actually talk about on the floor?
Oh, I have talked about it on the floor. I've talked about it with clients, you know, and there's one name that comes to mind when I see these risks or the articles written about the possibility that Trump wants to put his stamp on the Fed and you know, President Erdogan, you know, comes to mind, you know, the want for lower interest rates. Now, in Trump's mind, he doesn't like a strong dollar, which, of course, has been associated with the U.S. Treasury for decades. He doesn't like a strong dollar. He would rather a weak dollar because he thinks that would boost exports and limit imports. But, of course, just getting interest rates down to weaken the dollar, it's really not that simple. And we can look to a country like Turkey and just, you know, that just that resemblance really, it just shows what really a mess to the Fed's credibility such a move would take. So I'm of the assumption that whilst we're talking about it, that Republican lawmakers just wouldn't allow that to happen. So it is a risk, but I do think it should be a really small risk.
Yeah, and even in the Trump team, there's been pushback against that very idea that Trump would do that. I mean, it just speaks to how many different advisors and how many different voices Trump has speaking to him. And one of the voices, Jane, we did also learn that potentially Trump, if he were president, would want to push back against any sort of de-dollarization, any idea that people outside of the U.S. want to do trade outside the dollar. Talked about things like export controls, currency manipulations, tariffs for those who try to de-dollarize. Jane, is something like that, one, even feasible, and two, what would the overall market impact be from those type of actions?
Well, you know, I come back to sanctions. So Trump used a lot of sanctions, and it's the use of sanctions that gives other countries, particularly say Russia, an incentive to move away from the dollar in the global payment system. There's a lot more sanctions being used now than there were, say, in the 1990s, and if sanctions are used increasingly, then that creates the environment where people want to move away. So the moving away from dollars is happening, will continue to happen. There is an incentive for it to happen, but it's really, really slow. And this is something that perhaps, you know, we could still be talking about, or various other people could still be talking about in, you know, 20, 30 years. It's not going to happen very, very quickly because the dollar is so embedded in the global payment system. It's so used as a invoicing currency. It's going to be so difficult to break away from that for huge amounts of firms and countries.
Well, maybe if Trump takes a swipe at the Fed, that could embolden China to divest even more. 5 consecutive months since the start of 2020, since the start of the year, selling bonds. Very quickly, we just had Derek Halpenny with us, and he's of the view that we're underestimating what's coming from the Bank of Japan. You're going to get You're going to get a hike in July of 15 basis points, 40 to 50 basis points by the end of the year. What's your view in terms of the hike narrative from the Bank of Japan? Is that what we need, or do we need it in size and scale to stop the rot in the yen?
Well, I think we probably do, but do we have the economic data in Japan to support that? And that's the question. Some of the data that's come out in the last month has been really quite disappointing. So I think the really important one is real earnings. That was disappointing. Hopefully that will start to pick up, because that will give consumers a lot more firepower. They can go out and spend, and that's what Japan is trying to watch. But I'd also say for June, you know, watch the bond buying program. Some people had thought that they would change that in the last policy meeting. They didn't. Perhaps there's a little bit more evidence that they can alter that in June, and that could give the yen a little bit of support.
And we also get CPI data on Thursday as well, so more there to look over for Japan. Jane, thank you so much. Brilliant stuff as always. Jane Foley of Rabobank. Okay, coming up, metals on the move, both gold and copper surging to records. We're going to track those moves for you here on Bloomberg Brief.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
It's your Monday version of Bloomberg Brief with me, Manus Cranny, and Danny Berger alongside me. We're tracking the metals market for you this morning. Gold and copper, both hitting records. We've got our mining reporter, it is Martin Ritchie, joining us now. I mean, Jeff Curry must be waking up this morning and just in delirium as this short squeeze takes hold of copper. Talk us through what is actually happening. I mean, we're breaking higher, so take us through what's going on.
Yeah, that's right. Very quickly, copper burst through $11,000 this morning to a new record. Over the past few months, there's been a flood of investor money coming into copper from investment funds looking to buy into this metal where they see demand rising, supply not rising so much over the next few years. There's just a lot of bullishness about. You mentioned Jeff Curry there. He is a famously bullish observer of the copper market. Said it's the best long trade he's ever seen. But all of this is a strange contrast with what's actually happening in the copper physical market. We've seen some signs of soft demand, particularly in China, where I am. People not so enthusiastic about the market. So the speculators do seem to be betting on copper prices, copper demand, and the market being tight over the next 12 months rather than right now.
We can't forget gold either, Martin. Quite a run as well, continuing to hit another record. I mean, the thing keeps moving and moving just when you think that the gold trade is exhausted. Does the macro narrative of one that we're looking at now, where cuts are looking better, the data is weaker, do we need to continue to see that, to see a trend of still gold buying?
Look, I'd point out three different things for gold. Just a very immediate thing today, the death in the plane crash, helicopter crash, sorry, of the Iranian president and foreign minister. Obviously, gold always has a kind of knee-jerk reaction to geopolitical risk and uncertainties. That's one thing. Secondly, as you mentioned, we've seen the kind of euphoria in bond markets over the past week. We've seen people expecting perhaps the Fed to cut rates sooner rather than later again, and that's helpful for gold as always. But then thirdly, and this is a more sort of undertow in the gold market, is about central bank buying, which has been a constant over the past 12 months. And when we see you had this in a previous conversation, I think you're talking about sanctions. When we see, for example, China and US trade tensions getting worse, that's also an environment, I think, where people start to think about de-dollarization whenever there's talk of more trade disruptions, more sanctions.
Yeah, absolutely. We see that with now foreign central banks dumping treasuries. China did the most on record in the first quarter. Hey, Martin, thank you so much for that. Martin Ritchie on the metals. Okay, let's get you a quick check on Ryanair shares because they are falling this morning, down to less than 1%, but down nonetheless today. The airline announced that ticket prices in the summer may be flat to modestly higher, but they did also say that demand is higher despite the low capacity. Bloomberg spoke to the CFO of Ryanair, Neil Sorahan, earlier this morning.
Boeing and Airbus are running behind on deliveries and will likely continue to do so
out into the 2030s. So, you know, one would anticipate that pricing would maybe be a bit ahead of where it is at the moment. That said, you know, we're going to grow by traffic by 9% this year to almost 200 million passengers, and we're guiding fares in the peak summer months flat to modestly up, and that's on top of a 21% fare increase last year. But at the moment, we are having to stimulate midweek traffic a bit more than we would have anticipated. Weekends, very strong. But I'd anticipate that, you know, with the schools closing in the next few weeks, that we'll start to see the midweeks close out as well. But we're taking in over 600,000 bookings a night. So demand is huge. And my advice would be to yourself, Tom, and everybody else, book sooner rather than later, because I think fares are only going to go in one direction.
But for a bit more detail on that, Neil, then, and we'll take that advice on board. Where do you see more positive price pressure coming through for you in the business in the quarters ahead? When does that become more substantial?
Well, I mean, the peak months for us are the July, August, September, and they're booking well at the moment, albeit that we'd only have, you know, over 30% of those bookings in place at this point in time, which is not unusual for the time of year. But we would anticipate that they'll be very strong into the summer. So that's why we're saying fares flat to modestly up into the peak summer months.
Okay, so you're booking, what, just above 30% for the summer season so far for Ryanair. I think we were speaking to EasyJet last week. They said about 39% for the summer season. Neil, in terms of the deliveries, there's another line crossing from the earnings story then around Ryanair saying there's a risk, you've said, and you and the team, there's a risk that there's further slowdown in deliveries of those Boeing 737 MAX aircraft. Can you give us a bit more detail on that? We'd heard that you had maybe 2 or 3 that could be delivered by June. Is that still on track?
Yeah, as things stand, we would hope to have 158, maybe if we're lucky, 160, 161 game changers in the fleet by the end of July. That's roughly 23 aircraft shy of where we had hoped to be at that point in time. But we're very pleased with how things are going with Boeing at the moment. The new management team, led by Stephanie Pope in Seattle, are producing higher quality aircraft, and the consistency of deliveries is getting better. So, you know, I'd be hopeful that we'll be closer to 160 aircraft by the end of July, and then, you know, we'll hopefully catch up the shortfall of 20 aircraft by November timeframe, which means there's only 29 aircraft left in our 210 aircraft order for the game changers, and they'll come in ahead of summer of 2025, and then hopefully by 27 we start taking delivery of the first of our 300 aircraft order for the MAX 10s.
That was the Ryanair CFO speaking to the team a little bit earlier on, Neil Sorahan. Joining us now is Sid Phillips. Sid, good to see you. I mean, we listened to Neil. We'll catch up with Michael a little bit later on, the CEO. If we look at these earnings and you look at this under delivery of planes, this is about a natural shortage versus vibrant demand. How does the summer look as you take away these first read from Ryanair?
Morning, Manus. So Ryanair is obviously the bellwether for European travel demand. And essentially, when they're sort of hinting that pricing may be modest this summer, it shows that there is maybe some resistance from consumers to sort of that revenge travel where people are willing to pay anything really for a flight to the beach this summer. And so I think that sort of people are being a little more cautious about booking, and airlines will have to start to discount fares as well as sort of stimulate demand and make sure people actually book those flights, because summer is when all the European airlines really make their money. And so they're going to have to fill up those planes, and they're going to do whatever it takes to fill those planes up.
And as Manus says, you can fill up as many planes as you want, but if you don't have the planes, it's a problem. Sorahan talked about potentially less deliveries from Boeing. We just had Boeing's annual meeting, Sid, on Friday. We talked about this last week, the anticipation for it. They still don't have leadership in place, future leadership, after Dave Calhoun leaves. What does it mean for Ryanair to continue to have this turbulence and really no end in sight, again, when we just don't even know who the leadership is going to be come early next year?
Yeah, that's a really important question. And I mean, Ryanair centered its fleet around the 737 MAX. And so they obviously have a lot of delays. There's a lot of delays in getting new aircraft in. And that's really contributing to them not being able to offer as much capacity as they'd like to be able to, and to be able to sort of compete in the market. And so there is a sort of disconnect there with Boeing, and Boeing is obviously the biggest sort of obstacle at the moment in terms of capacity for them. and for the broader industry as well, because, I mean, the industry at the moment is struggling to get as many airplanes as they can. I mean, we just saw a deal in Saudi Arabia where they ordered 105 new Airbus planes. And that, again, they said they would have liked to order more planes, but they couldn't because there weren't any airplanes available. So I think that's really the key question. How do airlines actually get brand new planes and get them flying?
Sid, appreciate it. That is Bloomberg's Sid Phillip. And tune in, as Manus mentioned, we're going to have an interview with the Ryanair CEO, Michael O'Leary, around 8:15 a.m. Eastern. Okay, coming up, we're going to set you up for your trading week. We got some Fed speakers, and a tech company might be reporting, one that you might have heard of. That's coming up.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Good morning. Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show. This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
It's your Bloomberg Brief, Danny Berger and Manus Cranny in New York. Okay, let's get you set up for your trading week. We're going to get more Fed speak. Raphael Bostic and the Fed Vice Chair for Supervision, Michael Barr, will be speaking throughout the week. Will they say anything different? Perhaps unlikely. On Wednesday, NVIDIA is going to be reporting its results. Let's be honest, that's the big event. The Fed minutes will also be given. G7 finance ministers and central bankers also gather in Italy to discuss the global economy. Manus, that starts on Thursday.
Yeah, we're setting up for a lot of differential in rate decisions across the world. Some micro movers for you. You've got Johnson Controls, activist investor. Elliott is in there, taking a stake over $1 billion. Micron has been upgraded to equal weight from underweight at Morgan Stanley on the strength of the AI capability. And JP Morgan rising on Wall Street Journal reports that the Fed and two other regulators are moving towards a plan that could lower the capital requirements by 20%. We got there.
we're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
We're getting closer to a point where we might actually see cuts this year.
We're still looking for easing now to begin in September.
The Fed put is still alive and well in people's minds. The more credible bear case would be a re-acceleration inflation.
If it's not a trend down, in fact, it is just inflation hanging out where it is, then I think they keep postponing.
Is the inflation target the right target? We all talk about wanting to go back to 2%. 2% is totally arbitrary.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started live from New York City this morning. Good morning, good morning. This is Bloomberg Surveillance, and what a week ahead we've got for you. NVIDIA earnings just 2 days away. We'll go through some expectations a little bit later this hour. Coming into Monday, building on 4 weeks of gains on the S&P 500, the NASDAQ, and on the Russell too. We're picking up on the scent of capitulation over at Morgan Stanley. Mike Wilson has a new year-end price target, 5,400. The old price target, 4,500. Bramo, the quote, a wider range of outcomes and opportunities.
And he came on this show and talked about the fact that it's getting harder and harder to have any kind of broad assumption of where this market is headed. A lot of different analysts have been really head-faked by the idea of a lot of differing cycles that are kind of overlapping and prolonging this recovery.
Mike Wilson's going to catch up with us tomorrow morning, so don't miss that conversation. That's just around the corner as well. Of course, that upgrade follows Deutsche Bank and Binky Chada lifting the 24 forecast to the top of the firm's range. AMH looking for 5,500 year-end.
Yeah, looking for that, and I think the biggest data point we're going to get this week that's going to really decide at least the direction, the short term for the market, is going to be NVIDIA. But going back to that Morgan Stanley note, Jonathan, I loved this quote. In short, macro outcomes have become increasingly hard to predict as data has become more volatile. That has been the theme on this show. Everyone comes on and they're finding it very difficult to decide where we are in this cycle and where we're going, although S&P higher.
You mentioned the data point of the week is NVIDIA on Wednesday. Second division US data is the quote coming from Kit Chooks of SocGen, just to squeeze that in. Existing home sales, Mitch, inflation expectations and durable goods. Second tier data. So we're light on data. We're heavy on Fed speak. Here's the calendar. Bostic, Mester, Barr, Waller, Jefferson, all in the next 24 hours, Bramo. Looking forward to some of this.
Yeah, meanwhile, over this week, we've got Bostic, Barkin, Barr, Waller, Williams, as well as the ECB's Christine Lagarde and a whole host of others from the ECB. To me, I'm looking at this and saying, what can they say that's new? And to me, actually, Chris Waller might be the most interesting because he's going to be talking about R-start. He's going to be talking about that long-term idea of inflation. That's where they got to go down. Because right now, I don't know what else they can say new, because right now they're talking about data dependency. Well, we can't read data. To Anne-Marie's point, this has become a really confusing moment that Morgan Stanley's Mike Wilson has been grappling with.
They seem willing to talk about normalization, but reluctant to talk about what normal actually is. So hopefully they entertain that idea in the next couple of days. Here are the scores for you. On the S&P 500, just about positive by 0.1%. In the bond market, yields look a little something like this, unchanged at 441.39. And in foreign exchange, Bramo, 108.70, going into a week full of second-tier data and big earnings release.
Second-tier data and second-tier central bank speak. Can you say that? Because the ECB speak is going to come out. When we talk about what's going on with the euro, we've really been looking at this idea of an ECB pushing back some of their expectations. Wednesday, to me, is the big day because we get also Fed meeting minutes. We also get $16 billion of 20-year bonds being auctioned off at 1 p.m. It's going to be amazing. We get all of that Fed speak. NVIDIA, I just want to put this stat out. 12 months ago, NVIDIA's share price climbed 20% on the results, and since that day, it has tripled in value. This is a stock that single-handedly can change the dynamic. To me, Wednesday's going to be the key moment, and NVIDIA could be a much bigger driver, and first-tier data very much for front and focus.
Yeah, Jim Reed at Deutsche Bank said the same thing this morning. Look out for that on Wednesday. Coming up this hour, we'll catch up with Steve Chevron of Federated, with markets coming off 4 weeks of gains. Terry Haynes of Pangea Policy on the death of Iran's president, and Abigail Ward of UBS ahead of another busy week of Fed speak. We begin with our top story. Equity futures building on 4 weeks of gains. Steve Chevron of Federated saying, quote, "The word right now is fine. Economic data has come in slower, but fine. Inflation is stickier and higher, but fine. Earnings have been fine. It all comes to continue to keep our base case scenario in play. An economy that remains stable and rate cuts that eventually come." Steve joins us around the table. Steve, good morning.
Good morning.
A fine morning to you, sir.
Fine indeed.
Everything's fine. Is that a good thing?
I think that's right. I mean, I think you've got a Wall Street that's waiting for something to break hard in one direction. And the story is that it's fine. Bulk of the probability is inflation that is grinding slowly lower and growth that is also softening but not troublesomely. And so it's fine. It's a fine environment for bonds. It's a fine environment for cash. And it's a fine environment for stocks.
Is it fine that you've got company, a lot of company up here?
That makes us nervous. You know, when we came out with a 5,200 target for this year, that was the high on the street, you know, back last September, and it's not anymore. And so you do start to ask yourself a question. Are any of these things going to break harder than you expect? Is inflation going to reaccelerate? Is growth going to slow more than you think? And I hate to say it, but right now, it's fine. It's moving in the directions expected, but not outside of the range of an acceptable move.
Things are not fine for Red Lobster. Things are not fine for a number of different companies that are really struggling with higher costs, fixed leases, the idea of labor that's been going up. Is everything just fine at the index level? But does it justify actually expanding into some of the less loved areas? Or do you kind of stay with that just fine, along with everybody else consensus?
No, quality matters because you do have rates that are higher for longer, and that puts pressure, right? That's going to put pressure on weaker credits. It's going to put pressure on weaker companies. Slowing growth does the same. You see the same thing on the low end of the consumer. So it is fine at an aggregate level, but there's pressure that the weakest players are having a harder time withstanding. And so I think as an investor, you've got to make sure that you're buying quality. That means higher quality credits, better balance sheets, better cash flows, because there is going to be some weakness and volatility on the weaker end.
What are you actually doing? Are you just looking at your portfolio and saying, that's fine, and then checking out?
No. What we're doing, I think, is we're really questioning ourselves. And John hit on the point earlier, because so many people have moved to a bullish kind of positioning, and it's less lonely up here is what we've kind of talked about. We're questioning the assumptions. So when you look at that retail sales number last week, is that just a little softer, or is that the sign of real consumer stress to come? Credit spreads, we're watching those on a weekly basis. You know, 2-3 weeks ago, they looked like they were moving higher, but then they've kind of come right back down. So we're constantly questioning this fine assumption, but nothing's violating it at this point. So I think what we're in is a kind of old normal expansion right now, where it's higher rates, a little bit higher growth, a little bit higher inflation, and that's enough for equity markets to grind higher.
Does your house view of 1 or 2 cuts this year maintain?
Yeah, I think we're probably more towards the 1 than we are the 2, just because the growth has been a little bit stronger. I will say, certainly the retail sales number and the jobs number, you know, puts 2 potentially back in play if we continue on that trend. But generally speaking, we think it's 1 or 2. And 1, we think the gulf between 1 and 0 is huge. Because even if it's just 1, the market will start to price in that we're in a cut cycle. And then we think you'll really start to see broadening out as people try to get ahead of that.
And what do you think that is? How much? Like, what's the data you would need to see to put two, potentially one before the election,
Labor
firmly in
market.
play?
It's labor market. I think for this Fed, June is probably not in play. I think that probably leaves July. I have to imagine they would like to avoid September, November if they can. And so the whole idea of either July or December, but certainly December.
Let's go through some quotes that we've got on the south side. One from Morgan Stanley and Alan Zettner. This bigger, not tighter economy allows the Fed to start cutting rates in September. Our conviction on 3 cuts this year remains high. Steve, what do you make of that quote? This bigger, not tighter economy allows the Fed to start cutting rates in September. Do you share that view of the way this economy is performing this year?
I think you got to be careful with inflation, because once you get past June, July, the year-over-year comps get difficult. And we're still running at about a 4% annual rate over the last 3 months. And so 3 to me is tough.
It's why inflation is going to come down, Lisa, which I think is really important. Peter Schiff, Academy writing over the weekend, if inflation continues to come down, it is likely to be tied to a weakening economy, which should be good for bonds, but not so good for stocks. It's working out why inflation from here will continue to come down from 3, perhaps down towards that 2%.
And this has been sort of the question all year, right? People have been looking for how much are we going to see a weakness accompanied with disinflation, or are we still looking at the lag effects from the pandemic? I know you're laughing, but this is what some people are saying, that this is just sort of year-over-year comps. What I find interesting, and Bank of America's Michael Hartnett really went through this idea of a very loose fiscal policy with a restrictive monetary policy. And if you have fiscal policy that starts to tighten, if, it's a pretty big if right now, then what happens with monetary policy? And does that sort of ignite some weakness? I think this sort of goes to the heart of the uncertainty of the moment, is that we don't understand the crosswinds of 2 policies that, frankly, are at odds with one another.
Steve, final word, if you can, on that.
No, I think that's right. I mean, you have a former Fed chair running a monetary policy that's very different than the current Fed chair. I think you have to get special dispensation to have a general run the Department of Defense. We might want to think about getting the same thing for having a Fed chair run Treasury, because you do have competing kind of monetary policies almost coming out of there. And I think that is the stimulus that you've seen has certainly buoyed small businesses, the consumer, the inflation impulse. And it's one of the reasons why I think so many folks that are looking at this from a macro perspective have had a tough time over the last 24 months, 40 months.
You've got some company, let's put it that way.
I do.
It's good to see you, buddy.
Thank you.
It's great to catch up. Thank you. Steve Chevron there of Federated on the latest in this market. Equities at the moment just about positive by 0.1% on the S&P 500. With some news elsewhere this morning, here is your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. President Biden came face-to-face with campus protests this weekend. The president gave a commencement speech at the historically black Morehouse College in Atlanta. Biden called the situation in Gaza and Israel heartbreaking and said he's working around the clock to get more humanitarian aid into the region. Several students and at least 2 faculty members showed solidarity with the Palestinians during the ceremony. Recent polling does show that significant numbers of young and black voters disapprove of President Biden's support for Israel in its war with Hamas. Nippon Steel is stepping up efforts to gain support for its takeover of U.S. Steel. Nippon is sending its vice chair and executive VP to Pittsburgh this week to meet with local staff and elected officials. It's also sending technical teams to review U.S. steel mills. They're hoping to find ways to boost investment and labor commitments to try to win over union leaders. Nippon declined to comment on the details. Now, birdie on the final hole was enough for Xander Schauffele to clinch his first major golf title, winning the PGA Championship at Valhalla. Schauffele finished with a major record 21 under par, beating Bryson DeChambeau by 1 shot. After being arrested before play on Friday, world number 1 Scotty Scheffler finished in a tie for 8th. And that is your Bloomberg Brief. John.
Hey, Danny, thank you. We'll catch up with you in about 30 minutes' time. Congratulations, Xander. Just a fantastic performance from start to finish for the whole weekend. Up next on this program, Iran's president killed in a helicopter crash.
It's a shock event in one of the most important countries in the region, but the immediate geopolitical implications may be quite limited, assuming that Iran does not blame outside countries or forces for this death.
The latest out of the region coming up next, live from New York City this morning. Good morning.
is on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond. Live from New York City, equity futures right now on the S&P 500 positive by a 1/10%. Yield just about unchanged on a 10-year, 441.79. And in the commodity market, we're down 0.5%, 79.68. Under surveillance this morning, Iran's president killed in a helicopter crash.
It's a shock event in one of the most important countries in the region, but the immediate geopolitical implications may be quite limited, assuming that Iran does not blame outside countries or forces for this death. They're unlikely to significantly change Iran's foreign policy orientation, but it is still early days and we don't know what is going to happen in terms of the blame game.
Well, here's the latest. Iranian news agencies have confirmed the country's president, Ibrahim Raisi, and foreign minister have died in a helicopter crash. Search teams located the wreckage in Iran's mountainous northwest region. The chopper went down on Sunday in an area covered with dense fog. Bloomberg Horizon's Africa and Middle East anchor Jumana Basechi joined us now for more. Jumana, talk to us about the latest coming out of the country this morning.
Yeah, good morning, guys. Well, it took us a while to get full details of exactly what happened yesterday. Late in the evening, Iranian state TV declared that the president had been involved in a quote-unquote hard landing situation with the helicopter. It took another 12 hours for the emergency rescue services to actually reach the site of the crash. Only at 6 a.m. local this morning did they manage to get access to the helicopter site, after which it emerged that indeed the Iranian president, Raisi, in addition to the foreign minister, were two of the 9 passengers on that helicopter. All of them died in the crash. Shortly afterwards, 5 days of mourning were declared in the country. And what has happened in terms of who takes over, the vice president, Mohammed Mokhbar, is going to take over tentatively as a transitional president per the constitution. But as per the procedure, the country needs to hold another round of presidential elections within 50 days. It should be stressed, though, and I think this is key, and this ties into what the prior guest was saying, that ultimately the decision maker in the country and the ultimate power still lies with the Ayatollah, with the supreme leader. He was quick to put out a statement yesterday saying that there will be no disruption in the country's affairs, even if it is confirmed that the president has died. He put that statement out yesterday, and of course, it did emerge that the president was killed in that helicopter attack. So yes, it is quite a shocking sequence of events for the country, but the messaging from the supreme leader, from the Ayatollah, is that it is business as usual. The public, however, may see it differently because, of course, the backdrop to all of this is Iran is undergoing a deep economic shock. Inflation is running close to 35%, and they're really being weighed down by the extent of these sanctions that are being applied to the country right now.
Jumana, when it comes to the supreme leader and the Ayatollah, Raisi was an individual that potentially was going to be a top contender. Where does it leave potentially that succession? Because Ali Khamenei is 85 years old.
And that is the question, Anne-Marie. And I think, you know, if you put it like that, the pathway to becoming the supreme leader is becoming president. And the assumption from the outside world is that President Raisi was on that pathway. He was seen to be very close to the Ayatollah. He was seen as a conduit for many of the more conservative fundamentalist policies that the Ayatollah wanted to apply. With him out of the picture, it leaves one person in mind, and that is the Ayatollah's son. So that is potentially the next person who could take over. That is Mujtaba Khamenei. But again, it all comes down to what the clerics within the Iranian Guardian Council want to happen. And this also bodes, questions and raises questions about the upcoming presidential elections and which are the candidates that are going to be vetted by that Guardian Council in order to run for these presidential elections. Back in 2021, when Raisi was elected, there were no other people who were allowed to run against him. Turnout was very low. It was only 50%. So who they decide to run as candidates for the presidential election could be a reflection of how they're thinking about a potential successor to the supreme leader later on.
Jumana, appreciate the update. Jumana Basechi there out of Dubai on the latest in the region. Terry Haynes joins us now of Pangea Policy. Terry, let's talk about your reaction, please, sir, to what took place over the weekend.
In addition to what Jumana already said, I would add only that of course, geopolitical risk is elevated still further by these deaths, but that the impact could be quite limited because in the Iranian system, what matters the most is the supreme leader first, and secondly, the proxies are generally run by the IRGC and not directly by the president. So, in terms of Iran's outer-facing activities, I expect that to be virtually unaffected.
That said, it's there's this question of can you walk and chew gum at the same time for a number of different countries in a very fraught region right now, given the fact that you're going to be trying to come up with a new president, potentially even hold elections in 50 days in Iran at the same time that there's huge dissent in Israel, given what's going on with a war plan or lack thereof. How do you see this wrinkle as affecting what's going on right now and the tensions right now, essentially between Iranian-backed groups and Israel?
Well, it's going to make Iran essentially double down on its own stance, I think, for the next couple of months anyway. As you point out, that 50-day bogey in terms of a new election is very important, and they're going to go out of their way to show that it's basically business as usual. At the same time, you've got a brewing crisis in Israel's government with many senior figures in the government, including the effective deputy Gantz, saying that they need to see something from the government sooner rather than later by early June about a plan to deal with Gaza post-war. So you're looking at a situation where for the next very few weeks, the puzzle pieces are more thrown up in the air even than they normally are.
Terry, we see this administration have to spend a lot more time in the Middle East than they had planned to coming in. We had Jake Sullivan in Saudi Arabia and Israel over the weekend. Any signals from those